to all of you, to accounts again. Okay. So as you already know, we'll be having our marathon session from today for 4 days, 13th, 14th, 15th. 16th is a Sunday. Then we'll be having one more on 17th. Okay. What we try to do here in this marathon session is one first thing which I would like to tell you is this is a revision session. So those who are expecting that I'll be explaining from the first until expectation like that, Pakka it will not happen. Okay, it's a revision session as the name suggests, revision. Okay, so what I'm expecting is you have at least read the subject once, because most of our focus will be on solving the problems rather than again repeating the same concepts. Okay, so we'll be solving questions from various sources. That is something which helps students for exam. If the students are learning the concept only for the first time now, then no need to write in September examination. Okay. So of course I will go through whatever concept is required to solve the question. I will tell, but not the way the actual classes happen. Okay. I will revise it. I will tell it, and I will start with the session. I mean the question. That's how it works. Okay. Only if we do it that way, we'll be able to cover it in 4 days, or it will take 8 days. Clear up? Okay. Now, so we'll be going all the way because overall, when you see your CA foundation paper, all the topics is important. But there are some topics, I will just tell it for your reference. But we will follow the flow from starting to the end. All the chapters are important. But there are some chapters, which requires less effort, but you'll be able to get more marks. There are some chapters where there is more effort and you will get more marks. So in that criteria, I will classify. First, I tell some chapters which is takes less effort but will be able to score more marks. For example, your company accounts is there. It's a very easy chapter and it is asked for more marks. That issue, forfeiture, reissue. That's an important chapter which requires less effort but more marks. Second is your partnership accounts. And that is more effort, more marks. Then one more. Final account. Again, more effort, more marks, because it's asked in every paper. Final accounts morally out of incomplete records or your normal final accounts. Any one question will pakka count. And partnership with any one question will pakka count. Company account, any one question will pakka count. So these three are very, very important. Other company accounts very important because it's very easy and more marks. Partnership with final accounts, a little effort is there. Little effort. But for most of it will be more effort. Okay. But pakka you will get questions. Now coming to the other chapters, I will put these 4 into one. Bill of exchange, depreciation, inventory, BRS. Then rectification of errors. Now these 5, any 3, any 4 will come in examination. And again, these are those areas where the effort is low. What is there in inventory? Aram say we can finish in 1 hour. What is there in BRS? Plus or minus only. Correct? No? So these are again low effort, but pakka there will be some question somewhere. Out of these 4 topics, any 2 or 3 will pakka come in examination. No way you are leaving these 4 also, because it takes less effort. And you can earn more marks. See how I am telling this. I am creating a new extra unit. Okay, marks per effort. Marks per effort is more for these inventory, depreciation, BRF, because they are simple concepts, but you'll be able to earn good marks. For me, if you ask, the final accounts part is there. That has more marks per effort because it's simple only. We have made it complicated, but it is very simple. Then, what else we have? Accounting process theoretical framework. Now that, if you see in question number 1B, question number 1 is a compulsory question. Otherly question 1A is true or false. Now, true or false is there? No. Most of the students ignore this. But please understand, that is your lifesaver. If you get it right now, around say 12 marks you will get. So please don't ignore the theory of any chapters. At least just go through once. Even if you go through once, you'll be able to answer true or false, and easily you'll be able to get what? 12 marks. So never ignore the theory of any of the chapters. All of it. Don't leave it. Just go through one. The basic theory. In-depth theory is also not required. The basic theory of all the chapters is enough to score 12 marks. Question 1A. So that's why theoretical framework becomes important for question number 1A. Then sometimes in question number 1B, which is asked for 4 marks. Generally, then these theory questions only will come most of the times if you have observed. So for that also theoretical framework will help. See, they'll either ask what is accounting policy, what is accounting estimate, what is provision, etc. Or they will ask the difference between that, they'll give different transactions and they'll ask you to tell which is capital expenditure and which is revenue expenditure. So that question is again from theoretical framework. So from question 1A and 1B point of view, first chapter is important because first question is compulsory. You cannot leave it for options. Then question 1C, generally they either ask rectification of errors or any these four things I told you. ROE, BRS, depreciation, and one more is inventory. So any one will come in question number 1C generally. So 4 marks pakka from these 4. So if you see, generally, all the chapters are kind of important. I cannot say that this chapter is not important. Because if a particular chapter comes for less marks, again the effort required is less only. So if you look at it from that angle, it becomes important. Okay. So that's why we'll be going through everything. So without any further ado, let's start. Okay. So let's start with so most of it, whatever we discuss here is what do they say? Theoretical only. Okay. So let's understand. Whatever comes in theoretical framework, as the name suggests, is theory. Okay. But one important practical question that can come from this chapter is that capital expenditure and revenue expenditure. Rest all is theoretical only. The theory part, let's go through fast. So some important things which I'd like to discuss. If you know it, Then just tell me very fast. So, you know the famous accounting definition, no? Accounting is an art of recording, classifying, summarizing, analyzing, interpreting, and communicating it to the users. So basically, we'll record it via journal entries, then classify it via ledgers, then we'll summarize it. You know, if we have 1,000 transactions, we will not show in financial statements as 1,000 transactions. We will summarize it to one single number. We are not, when rent comes, I will not show 1,000 transactions. Correct? No, I will summarize it to one simple thing. So that is summarizing the data. Then we'll analyze. Whenever the transaction comes, are you blindly doing debit or credit? No, you'll analyze it. Asset, expense, income, liability, capital expenditure, revenue expenditure, all that you are analyzing. Correct? No? Then you are interpreting. Once you prepare financial statements, okay, then you have to interpret as to what this data translates to the users. Then ultimately, once everything is prepared, the entire financial statement is communicated to the users. Basically, accounting is these 6 functions. You know, recording, classifying, summarizing, analyzing, interpreting, and communicating to the users. That's very important. Then, always is an answer. Sorry. What are the objectives of accounting? These things they can ask if your luck is very good. These are the way they can ask questions. Objectives of accounting. So first one, systematic recording. Correct. It is systematic recording of. Correct. No. In accounting, the first function is what? You are recording the transactions. Do we have a systematic way to record the transactions? Yes. We are not simply writing it in one sheet. You know, we have journal, ledger. We have a process in place. So it is systematic recording of transactions. Then ascertainment of results. Then again ascertainment of results. Results is ascertained in where? In which of our process? Trading. By preparing trading and P&L. So ascertainment of results happens there. Then ascertainment of financial position. That will happen where financial position is always understood in balance sheet. Next. Communication. Once you prepare everything, the main reason of accounting is to communicate it to the users, so users can make a decision. Correct? No? What will users do with that information? They will do decision making. Correct? And that's why accounting will also help for decision making. You communicate it to the users. For decision making. Next. That's all. There's one more. To know the, you can note down if you don't have it. To know the solvency position. What is to know the solvency position? Solvency is having more assets than liabilities is called solvency. Having more liabilities than assets is called insolvency. Do we have sufficient assets to cover our liabilities? You need financial statements, you need accounts. So whether a company is solvent or insolvent, to know that, accounting is required. So what are these points? Knowing these points is not important. What is the heading of these points is important. Later when they ask objectives, functions, everything sounds same in examination. Knowing the heading here is very important. So these are what? Objectives of accounting. Very important to know that. Then we have functions of accounting. Pakka this will happen in exam. Objectives kya bolta? Functions kya bolta? So please make sure that you don't do that. What are functions of accounting? Not there. Recording of that only. That is objectives. No, same is there. Second, ascertain financial position of an entity. Third, information will be made available. Okay, do one thing. You note it down here. Now we'll discuss the functions of accounting. Similar only, but there are different set of points. That one. That E-commerce is there. Here also it is there. Okay. So first one is, what will accounting measure? It will measure the performance of the business. Correct. Of course, accounting is measuring the performance of the business. Is it measuring past performance, future performance? Of course, no. That is one of the demerits of accounting. We'll never think about in accounts. It is a result of past performances. Future data information. Correct. So it is measuring the past performance of the business. Second, forecasting. Forecasting means what? Predicting the future. Of course, our accounts will not give any future information. We are giving only past information. That's why accounting is called as post-mortem job. But why they have given forecasting here? Because the data that we have prepared, which belongs to current and previous year, helps us to forecast the future information. Adhikya forecasting is one of the functions. Our data that we prepare helps to forecast the future numbers or future performance of the business. That's why second function becomes forecasting. Third, this we know why. Of course, from the data that we have prepared, it will help the users to make some decisions. Fourth one, comparison. And one of the important jobs of accounting is we use it to compare and evaluate our position. We do two types of comparison. One is we compare our own data with our own previous year data to see how we are doing. One more is we compare our data with the other competitors or other peers to know that where we stand in the industry. So here the comparison. Our own data with previous year, our data with the peers to see where we stand in the competition or where we stand in the industry. So comparison becomes important. Then control. So what is this control? In any kind of businesses, no, there will be some kinds of weaknesses. For example, you are doing production, there is lots of wastage happening. Your cashier, he is collecting all the cash and he is taking home. Can you see the weaknesses that is there in the process? So whenever there is so much weaknesses, no, it is very important for us to find it out and rectify those weaknesses. Only when you prepare accounts, you will come to know that such weakness exists. Imagine there is a world where you are not preparing accounts. Will you know that this is happening? Loss ಆಗ್ತಿದೆ ಅಂತ ಗೊತ್ತಾಗಕ್ಕೆ ಸಾಧ್ಯನಾ? ಇಲ್ಲ. ಇಲ್ಲಿ ಯಾರು ಕ್ಯಾಶ್ ನ ಖರೀದಿದ್ದಾರೆ ಅಂತ ಗೊತ್ತಾಗಕ್ಕೆ ಸಾಧ್ಯನಾ? No. Only when accounts are prepared, you'll understand about the weaknesses and you can avoid it. Okay. So that's why accounting, one more function of accounting is that control. It helps you to identify the weaknesses and eliminate it. Clear? All of them. And sixth one, government regulation and taxes. You know, government also needs our data for tax collection and budget allocation. Correct? Only when we prepare accounts, they'll get some data which helps them to do budget allocation and to collect taxes. So these are the 6 functions of accounting. Then, so is bookkeeping and accounting same things? No. Bookkeeping is just a recording function of the accounting, whereas accounting is much more. We write the recording, classifying, summarizing, analyzing, interpreting, and communicating. Accounting is a bigger process. Bookkeeping is just recording of the data. Recording, it got over. So, tell me true or false. Bookkeeping is a subset of accounting. Yes. Accounting is a subset of bookkeeping. No, either. Via bookkeeping can we take any decisions in bookkeeping? No, it's only recording of data. No. Just by looking 20 books, what will you understand? In accounting, we can take decisions, but in bookkeeping, we cannot take decisions. Correct? Then, that is one important difference. Then, accounting has various subfields. Yes, accounting has various subfields, whereas bookkeeping has no subfields. For example, under accounting, we have different types of accounting. That they also they can ask. Under accounting, we have different fields. That only. How many kinds of accounting we have? Financial accounting, management accounting, cost accounting, then social responsibility accounting, then human resource. So what accounting that we do in our paper one is called financial accounting, our debit and credit. Like that. Management accounting and the data that is prepared for the internal use of the management, for the purpose of CEO, for the purpose of CFO, we prepare text, no PPT for their decision making. That becomes management accounting. Cost accounting focuses on the costing of the product. I thought if I'm manufacturing a product, how much is, what is the components of the cost, how to reduce it, all that comes under cost accounting. Social responsibility is every entity, okay, they just don't have financial benefit and financial cost. They're also incurring something called a social costs. Now say suppose there is an entity which is making huge profits. So what will you think? Right? Huge profits. Let us continue the business in that. But such business is also creating a lots of pollution which is affecting the environment, which is a social cost. Now tell me, should we just see the profitability and let the business continue? Or should I also see the pollution that the entity is creating? Pollution, because society is also important. Now, this is a very new form of accounting that is gaining attention. We were, all these years, we were just focused on recording financial benefits and financial costs. We were not focusing on social benefits and social costs. Now we are accounting for that also. E-company that social benefit estimate, social cost estimate. So that is focusing on, say suppose there is one entity which is doing lots of good things to children of government schools. Now that's a social benefit that entity is giving. That also should consider now to see whether an entity should continue or not as a society. So now we are accounting for the social benefits and social costs also. So that comes under social responsibility accounting. And human resources, any cost or cost benefit analysis that you do for employees. If you have to hire an employee, if you remove an employee, lots of costs are involved. Correct? No? Salary, bonus. So if you have to shift to Bangalore, you have to pay money for that. For his training, you have to pay money. For everything, you are supposed to pay money for employee. Accounting for the cost that you incur on employees comes under human resource accounting. So these are the different subfields of accounting. But in bookkeeping, we don't have different subfields that are on the bookkeeping. Accounting, we have various subfields. Sort of clear? What are the objectives of bookkeeping? So, correct, you're actually right. So, objectives of bookkeeping is just recording of but they have one more, two more. The one is recording of transactions and one more is ascertainment of financial effect. Again, in bookkeeping, since you are recording, while recording, you are passing what? Journal entries. When you are passing journal entries, you will focus on whether the asset is increasing, whether the asset is decreasing, whether the liability is increasing or liability decreasing. You will do the same thing for income or expense. So in this process, don't you think you are also thinking about the financial effect on the business when you are recording the transactions? So that's why two things comes under bookkeeping. Why I am going through all this is because you never know in that theory question if they ask these simple things. Our answer is 3 months, 4 months will get. In question 1B. So that's why. The next. Who are the users of accounting information? Children. And then, we have internal users and external users. Under internal, we have management, employees, then the CEO, CFO, they come under employees too, as I said. Management to employees, then Then external, we have investors, we have creditors, we have lenders, we have shareholders, we have potential investors, we have customers also see, then we have government. All these are external users of accounting. Then public also. Public will come under potential investors. No need. So what are the limitations of accounting?
It is like a post-mortem job.
Huh?
It is a post-mortem job.
Actually, it's correct. So first is correct that accounting is a post-mortem job because whatever data that account gives us is only about current and past. It will not give any information for future. We can use this information to forecast. Forecasting is our job. And our accounting by itself is not giving any future information. So it's a post-mortem job. P&L only, balance sheet only. It's just giving current past. Second.
Quantitative, not qualitative.
Exactly. Qualitative aspects. Qualitative aspects cannot be recorded in account. Correct? No. Employee loyalty. All these things are qualitative aspects which cannot be recorded. Money measurement concept. Only anything which can be measured in terms of money can only be recorded. Third,
it can be easily manipulated.
If it comes. Before that, it ignores
Time value
of money.
Inflation.
Time value of money or inflation. While doing accounts, we just record a transaction at that number. Like that. We are not focusing on present value, future value, or we are not focusing on the inflation, which is a limitation. Fourth one, it can be manipulated. Since it is prepared by one person like us, and since accounts involves a lots of accounting estimates, correct? Now, what is accounting estimates? Estimates are the guesses that we make in accounts. Prediction, a guess. For example, useful life. You say machine runs for 10 years, but someone has guaranteed it's the estimate that you have done. Or scrap value, residual value. You are telling what is residual value? The value that the asset fetches at the end of its useful life. Has someone guaranteed you? No, it is just an estimate. So since it involves lots of estimate, there are chances that each and every person estimated the way they want, which leads to manipulation. Correct? Now that is one of the demerits that accountants can manipulate it. Then
Accounting might not always be accurate. Estimates.
That's what it comes here. No, because of the estimates, accounting can never be. There is one more point. Because of accounting estimates, accounting can never be accurate. Because one guy will estimate the way you want. He'll estimate 10 lakhs as scrap value. I estimate 12 lakhs. Because of the difference in estimates, the accounting results can be wrong. And the wrong and it can be different from each other, which is a problem thing only. Then one more thing was there. Accounting principles will conflict with each other. This point is there. We have various accounting principles. Just to take an example, later we'll do valuation based. We have historical cost valuation also, we have one more. Current cost valuation also, we have realization. Everything there. The historical cost is in conflict with current cost. You are understanding that? So like this, at many places, accounting principles themselves conflict with each other. One concept will be telling something, one more concept will be telling something which is conflicting to what this concept was telling. So this is again a demerit. Accounting principles can conflict with each other. Okay. So these are all the limitations of accounting. Okay. And one more demerit is that we have to, if you have observed at various places in accounts, to do same accounting, we have different accounting policies. And to do the same accounting, if you have different methods, it is called accounting policies. When you have 2-3 options to do the same accounting, then it is confusing for the accountant. That is one problem. Second, one entity is using one accounting policy to do the same accounting, then the financial statements will not become comparable. If everyone has followed the same accounting policy, we can compare it. If one entity has used one accounting policy, comparability becomes difficult. So having more choices is a problem, but our institute is working hard to limit those options to one someday. But today, some places we have 2-3 options. For inventory, we have FIFO, WAM, LIFO, all the 3 are there. Actually, LIFO is banned now. We have only 2, LIFO and FIFO and weighted average. See, there are 2 options. Now, there are chances that one company will follow FIFO, one company will follow weighted average. That is the problem. Now, we will eliminate it. We'll bring it to one someday. So that is one demerit, that we have lots of options to do the same accounting. Those options to do the same accounting is called accounting policy. There are 2 important terms in accounts: accounting policy and accounting estimates. Estimates are the guesses that we do. Example, useful life or scrap value. Accounting policy is to do the same accounting when we have multiple options, and it is my choice to choose whichever policy I want. That is called accounting policy. For example, that FIFO weighted average. We have an option there. So that's an example for accounting policy. Estimates are the guesses that you do. Clear all of it? Now, one famous question that they can ask. I'm sure WDV SLM option is there, no, in depreciation. You can use WDV also, SLM also. Is that an accounting estimate or accounting policy? Others fast. Estimate. It's not policy. You have 2 options. Why not? The method we are using is also estimate. Actually, please understand this one thing. WDV and SLM is estimate. Though it sounds like accounting policy, it is not accounting policy, it is estimate. Because accounting policy, what differentiates this as estimate is, in accounting policy, we'll have choice. You can use WDV also, you can use SLM also. If that was the provision, then I would have put it under accounting policy. But do we have a choice in SLM and WDV? No, we don't have a choice. For example, if the asset is giving economic benefits straight every year, then I have to follow SLM only, matching concept. If the asset is giving reducing economic benefits, then I have to follow WDV only. I don't have choice. If I had choice, it would have become accounting policy. So please remember, this can come as a question. Depreciation methods are estimates. When you change from SLM to WDV, it is change in accounting estimate, not change in accounting policy. We don't have an option there. Okay. Now the question is, okay, let's finish it first. And one more important discussion again, which comes is, in which all service, what all services a CA gives? One time they had asked this question fully as a theory. I thought, what all services a CA gives? You know, again, even if you guess it, you'll get 5 or 6. See, we'll maintain books of accounts, statutory audit, taxation matters, then in internal audit, then management consultancy, then financial advice we give to the clients, then what some other services like secretarial workflow, investment advice. I mean, that comes under financial advice. Okay. Then other services. Otherwise, Sannaputta small works will be there now, like secretarial work, company incorporation. Then liquidation. In liquidation, a CA is required to sell all the assets and distribute the money to the stakeholders. Some other services. So these are the services provided by a CA. A possible question again. Okay. Then a CA can also work in the industry. if you are working as an employee in a company, you are a CA in industry. If you're giving all the above services that we discussed, then you are a CA in practice. Other company only working as an employee, you became a CA in industry. You can also work as a CA in public sector enterprises and the government companies to understand how the government works, how the larger picture of the government works. You can also provide more to the society if you are working as an employee in public sector enterprises. Clear? All of you. Then the CA can also involve in framing fiscal policy. For example, you have learned accounts so much, you have learned economics so much. Now you can go to budget and frame budget for the country. That also you can do as a CA. Most of the classic budgets are given by one of the CAs. We will discuss about it some other. Okay. Next. So yeah, that's about this. Now let's discuss about. We discussed about accounting policy. Its various methods to do the same accounting. Every year, can we change the accounting policies or are we supposed to be consistent? What do you think? There are three fundamental accounting assumptions by the users of the financial statements. What are the three fundamental accounting assumptions? Going concern. These assumptions are made by whom? Allah. By the entity or by the users?
By the users.
By the users. Okay. Going concern. That means what? If nothing is told in the financials, then the company is a going concern. Second, consistency. This point only I was telling. Since we had various accounting policies and there are different options to do the same accounting, every year when you are preparing financial statements, you are supposed to be consistent and then you have to use the same. First year FIFO if you are using, second year also FIFO, third year also FIFO. If you are not telling anything in the financial statements, my assumption as a user is what? That we are consistent. If we have changed it, it is important for us to disclose it in financial statements, or else users will assume that we were consistent. Now, because of this assumption, are we supposed to be consistent with accounting policy? We cannot change it only. We can change it under two special circumstances. What are the two special circumstances? Okay. And two circumstances are if law asks you to change, law or statute asks you to change the accounting policy, you can change the accounting policy. And if it leads to a better presentation, then you can change the accounting policy. Under two circumstances, you can change, or generally you cannot change the accounting policy or expect it to be consistent. And the third one is? Third one is fundamental assumptions and the third one. Going concern, consistency, and third one is accrual. If nothing is told, we are following accrual basis of accounting. That's what users will assume. I hope you know what is accrual. There are two types of accounting, cash basis, accrual basis. Correct? Cash basis is whenever you receive, you record it as income. Whenever you actually pay, you record it as expense. Under accrual, you don't care about the cash flow. If you have earned it, you will record it as income. If you have paid it, if you have used it, you will record it as expense. You will not worry about cash flow under accrual. Okay. So if you have not told anything about the accrual or cash basis, users will assume that you have followed accrual basis. That's why it's called three fundamental assumptions. Then we will come to the different concepts that we have in accounting. Money measurement concept. We know what is money measurement. Then conservatism. What is conservatism?
You have to expect future losses.
Future losses to be booked in current year, but future profits or income cannot be booked. Next. And then valuation norms. Business separate entity concept, business and company treated as two different people. Then materiality. That means all the material information should be disclosed in financial statements. What is material information? How is it defined in our books? No. That is why I asked you. See, material information, if they ask, what I have to answer is, it is any information any information that influence the decision making of the users.
Right to present.
If you give this information, if you think that shareholders will change their decision, that information becomes material information. Any information which influences the decision making of the users is called material information. Material information can be quantitative or qualitative, but it's not only money. Sometimes if director steals 10,000 rupees also, it's a material information because director is the one who runs the company. If he has that intention, then that is something which is alarming. Okay, no? It can be quantitative also, it can be qualitative also. It's never small or big. Okay? Small or big plus qualitative. Clear? So all the material information should be disclosed. Next concept. Periodicity. You know, just because the business is going concerned, will not wait for the end of the business to record transactions. Every uniform period we will prepare financial statements. For us that period is 1 year. Every 1 year we prepare financial statements. Every period we measure the performance. So all the income or expense which pertains to this period should come in that year. Any expense income which is earned or used should come in that period. Right? Next period should come in next period. That is called periodicity concept. Next we have accrual. You know what is accrual? Materiality test. Matching concept, very important. Your economic benefits and your spends should match. Right? Whenever you spend money in a way, you'll get some kind of benefit from that spend. That spend and the cost should match always. Now, if you have sold 5 units, you have to compare it with the cost of 5 units. Just because you have purchased 10 units in that year, you cannot compare sales of 5 units with purchase of 10 units. Because the remaining 5 units will be sold in next year. So you have to match it. That is matching concept. Next, dual aspect concept. For every transaction we have 2 aspects, debit and credit. Next, realization. What is realization concept?
After that,
We have this habit of recording the income only if it is realized. At the notional profits you will not record generally. Realized, either you should have received it or you should have earned it at least. For example, credit sale. The moment you transfer the goods, you have earned it. You should have earned it or you should have received it. Then only record. Notional you cannot. Next year I will do 5 lakh rupees sales. Let me book it. In the next 3 months I will do 10 lakh rupees sales. Notional you cannot book. Should have earned it. That is called realization. Next.
current process.
Now we'll come to the valuation norms. To value the assets, we have 4 different valuation norms. This is also our last class. One is historical cost. Okay? You are showing the asset at the purchase price on the date of purchase. That is historical cost. You are showing it at that price only. My Suzuki Access 125 was bought 7 years ago for 65,000 rupees. That becomes historical cost. Second,
While you're selling it, you have to
realization. And next is realizable value. Realizable value. If I want to sell my 7-year-old Access 125 today, people will give me 20,000. The 20,000 is called realizable value. If I am showing my Access at 20,000, we are following realizable value valuation. Third, current cost. If I have to buy a new Suzuki Access 125, it costs me 1,30,000. That is called current cost. If I show my Access at 1,30,000, I am following current cost. And fourth one is present value cost. What is present value cost? Every asset will give us economic benefits over many years. I'll take all the economic benefits. Say every year this asset is giving 20,000 benefit. For 5 years it is giving 1 lakh. Bring that 1 lakh to present value. Maybe it comes to 70,000. If I value this asset at 70,000, we are following present value cost concept. Take the benefits over the years, bring it to what? Hey, you don't know quantitative aptitude students, what is present value future value? So take all the cash flows that you are getting from this asset, bring it to present value. Whatever number you get. If you are valuing the asset at that number, then you are following present value cost concept. So these are the 4 valuation methods that we have. All of you clear? Then this we discussed, valuation we discussed, estimations. Very important discussion is our capital expenditure. This is the most important. Pakka they will ask questions from there. Okay. I feel most of the time it has come. So what is capital expenditure?
While setting up
Second way.
expenditure incurred on fixed assets. So is that
What were we discussing?
capital?
Capital expenditure and revenue expenditure. Classification of this is very important. So let's start. Any money that you spend can be classified as capital or revenue. Capital is generally affected in balance sheet, whereas revenue expenditures are affected in P&L. And any income under expense comes under revenue expenditure, and asset comes under capital expenditure, balance sheet. Correct. Now, how to classify this? We have some points which helps us to classify. Generally, capital expenditures will have an economic benefit for more than 1 year. Capital expenditures will give economic benefits for more than 1 year. Revenue expenditures will give economic benefit for 1 year or less than 1 year. That is one important criteria. Second, the frequency of capital expenditures is very less, whereas the frequency of revenue expenditures is more. It happens more number of times in a year. Third, nature of business, very important. Nature of business is very important. For example, when you buy a furniture, you will tell that it is which expenditure? Capital. But if your business only is to buy and sell furniture, then that becomes revenue expenditure. So nature of business is important. Next, materiality. Frequency we discussed. Materiality. Generally, capital expenditures amount involved will be more, whereas revenue expenditures amount involved will be less. Then, whenever you buy a new asset, of course that becomes capital expenditure. Any directly attributable expenses until the asset becomes ready to use will also become capital expenditure. Please note this word, ready to use. So the two tricky points that they can ask is, say suppose you have spent some money on inauguration of the asset. Is it a capital expenditure or revenue? Why not? Because by the time inauguration happens, asset is already ready to use. Any money that you have spent on training of the employees, any money that you have spent on training of the employees as to how to use the asset, revenue or capital? Revenue. Why? Because the asset is already ready to use. Training is irrespective of asset being ready to use. So it becomes a revenue expenditure. All of it. Testing. You have spent some money on testing the asset. You have spent some money on testing the asset. Capex or revenue? Capex, yes. Because without testing, an asset is never ready to use. So testing becomes capital expenditure. Or any other directly attributable expense. Installation, loading, unloading charges, carriage, all the incidental or directly attributable expenses is also treated as capital expenditure. Okay. One more thing we have is subsequent expenditure. What is subsequent expenditure? It is money spent on the existing asset that you already have. Now, when you spend money on an existing asset, should we add it to the cost of the asset or should it go to P&L? Should we treat it as capex or revenue? So, what is the criteria? If the spend, whatever you have done on the existing asset, if it increases the efficiency, then you can capitalize, or else you cannot capitalize, it becomes revenue expenditure. If it increases the efficiency, it becomes capital expenditure. Okay, say suppose building, I'm repairing the building, spend some money on repairs, capex revenues. See, I'll tell you one hack to do this in exams. Generally, when renovation is happening, renovation is an initial expenditure or subsequent expenditure? It's a subsequent expenditure. Renovation, when you are building in renovation, if you are building something new, for example, we build bathroom here in renovation. Tell me, is it capex revenues? But what is the efficiency?
Employees will be motivated.
Efficiency is what? Your revenue earning capability should increase. So please understand, guys, that's why I'm happy. Now, of course, it is directly not attributing any efficiency, but it's a helping asset. Correct? Now, renovation, if you construct something using brick and cement, no matter what it is, bathroom, adu, but if you have constructed something literally, an extra classroom, an extra bathroom, an extra tank room, here the efficiency test will not come. A construction involving brick and cement becomes capital expenditure. All of you understood that? For other things, you'll apply your efficiency test. Okay. For example, repairs. Efficiency increasing, decreasing. In repairs, efficiencies are maintaining. It is not increasing. Hence, you will be treated as revenue expenditure. That's all. Say suppose I'm just getting these walls painted. Capex revenue. Revenue extra. Because that is not increasing any efficiency. I'm installing the new equipment here. It's a capital expenditure because new asset, purchase of new asset or any directly attributable expenditure will come to capital expenditure. So what you have to do in examination is, say what? So what you are supposed to do in exam is, whenever some kind of spend comes, no, the first focus should be whether it is initial expenditure or subsequent. Because please understand, if it is initial, if you are purchasing it for the first time, then any directly attributable expenses will also be added. And subsequent bandana, you have to do the efficiency test. For example, I'll explain this in an example. Okay, I bought one second-hand building and I got it painted and repaired. I spent 30,000. Capex revenues. Now you cannot put repairs under revenues because this comes to first time acquisition. First time acquisition, any directly attributable expense until the asset becomes ready to use becomes capital expenditure. Now here the repairs came under capex. Other you already have an existing building and you are spending on repairs and painting, that becomes revenue because subsequent expenditure under efficiency test will come. Initial expenditure until assets become ready to use, whatever you spend, that becomes capital. Any money that you have spent on legal to acquire the asset, capex. Any money that you have paid to defend the suit that someone has put on you, that becomes revenue. I did not complete the question. This is very important. Read the full question. I am paying my lawyer some fees to defend a suit. In that suit, some other person is claiming the title of the property. And then someone has put a case saying this is my land. Now you are defending that.
Capex, because if you get to keep the land for a month.
I am already keeping the land. Now suddenly you came and you have put a case.
Okay, so if you spend the money and
I am spending the money for the lawyer.
right, let's say you don't spend the money and I win the case, then I take the complete.
That is different. Okay, so that is where the case goes. Now you tell. We are defending. Defending guys, that is not a subsequent expenditure because that is not increasing any efficiency. I am just defending. Say suppose all of you put a claim. I have to fight all of your cases. That is not increasing any efficiency of the asset. So that becomes revenue expenditure. Are there any legal expenditure you are incurring to buy an asset becomes capital expenditure. So it's very important for you to classify which is initial and which is subsequent and then decide. At the subsequent are efficiency. Initial are until it becomes ready to use. All of it clear? So then we have capital receipt and revenue receipt. Capital receipts are affected in balance sheet. Revenue receipts are affected in P&L. Whatever you get, whatever receipts that you get as part of your operations, which is what? Money received during sales or money collected from debtors. These are operating activities of the business will come under revenue receipts. And for your exam purpose, any interest received will also come under revenue receipts. Any interest received or any money received from your customers as part of your operations. Any investing or financial activities will come under capital receipts. Investing, spending some money on buying new assets, be it PP, non-current assets, any kind of non-current assets. You are buying a PP or selling a PP. It's a capital. It's a investing activity. You are buying investments, you are selling investments. You are receiving interest, you are receiving dividend. All these are technically investing activity. So anything which is coming, any receipts which is coming under investing activities will come under capital receipts. But one thing is interest. Interest receipt will still come under revenue. Then, say suppose you are issuing shares, you are issuing debentures, you are paying interest, or you are taking loan, you are issuing preference shares. All these receipts will come under capital receipt. Any financing activity, any investing activity comes under capital receipt. Operating activity comes under revenue receipt. Now I'll ask you, we took loan, capital receipt or revenue receipt? You have to tell first. We took loan.
Capital receipt.
Why?
It's a long term.
What criteria will I tell? Financial activity.
Yeah.
Alva, if you take a loan, your finance. Did you understand what is financial activity? First, you understand. Operating activity is what generally happens in the business, which is like sales. Investing activity is you investing in fixed assets, you selling fixed assets, or you investing in some investments or selling investments comes under investing activity. Financing is you financing the business. How will you raise finance for the business? Issue shares, issue debentures, take loan, pay interest. All these are financial activities. OA, operating activity receipts will come under revenue receipts. Any other claims will come under capital. Now when you take a loan, it is which activity?
Finance.
Financial activity. So it comes under capital risk. You issued shares. Capital risk. You issued preference shares. I sold furniture. I got money. No, same investing activity. No, it is capital risk. Sold plant and machinery. Sold some kind of investment. Capital risk. Sold goods and received money. That is revenue risk. Collected money from debtors. That is from customers. It is revenue risk. Anything you are receiving normally as part of your operations, like sales money, will come under revenue receipt. Sales and interest will come under revenue receipt. Anything else generally comes under capital receipt. Exam bank. Okay. Anything collected from customers or received from customers or interest comes under revenue. Anything else will comes under capital expenditure. All of it clear? But one thing what you should know is, now, sale of plant for rupees 12 lakh, whereas the book value was. Tell me, what kind of receipt is this? It's a capital receipt because I investing activity. So technically, this entire 12 lakhs, no, I will not take it to P&L because it's a capital receipt. It should affect balance sheet. But to the extent of profit, how much is the profit here? This profit will go to P&L. Remaining 10 lakhs will be adjusted for a balance sheet. This one thing we should know. All of it clear? Again, pakka question. This is capital expenditure, capital receipt versus revenue expenditure, revenue receipt. So when we have accounting standards, what are accounting standards? Earlier, these people did not have any rules as to how to do the accounting. Later, accounting standards came. Now, accounting standards will prescribe how to do the accounting. Accounting standards are issued by whom? It is issued by ICAI for non-corporate entities. Whereas it is issued by MCA for corporate entities. All of you correct? Corporate and the companies. Non-corporate and the other than companies. Okay. What is MCA? Ministry of Corporate Affairs. Okay, so that is one important thing. Next. What are the objectives of accounting standards? Why did accounting standards come? See, the main thing was we did not have any accounting rules anywhere. People were doing accounting the way they want. We wanted to standardize everyone's accounting treatment. I wanted everyone to follow same accounting. So that's why we got accounting standards. So first objective is to eliminate non-comparability of financial statements. That much is enough. One of the essential features of what are the very important point? What are the features of financial statements? Somehow we left it. Very important question. Financial statements has 4 features. When I say financial statements, what all should come in here? Balance sheet, P&L, cash flow statement, notes to accounts. These are the 4 things. Okay. The features of financial statements are first one is understandability. So first of all, whatever financial statements you prepare, people should understand. Second, relevance. You should put stuff only relevant information and don't confuse shareholders with irrelevant information. Third one, reliability. Try to make the financials reliable by following accounting standards or getting it audited by a CA so that the financials becomes more reliable. And the fourth one is, one of the essential features is comparability. We compare it with competitors, we compare it with prior year data. So comparability is very important feature of financial statements. So these 4 are important. Okay. Now, if one entity is following one accounting standard, this is the era before accounting standards, one person is following one accounting treatment. Can we compare each other's financial statements? No. Other than I got accounting standards, now everyone are following same accounting, so we eliminated the non-comparability of financial statements. Now, since everyone are following same accounting standards, everyone can compare the financials of each other. Second, earlier to do the same accounting we had multiple options. With accounting standards, we have tried to reduce the multiple options we had to do the same accounting. Reducing the reduction in alternatives. So 2 things. These are the 2 main objectives of accounting. Non-comparability is eliminated and various options that we have to do the accounting is eliminated when accounting standards came. Every accounting standards will have 3 major sections. What are the 3 major sections? One is recognition, one is measurement, and one more is presentation and disclosure. Recognition tells when to recognize the transaction. Measurement tells at what amount should we recognize the transaction. And third one, presentation disclosure tells where to disclose what information with respect to this transaction. So these 3 sections will be there in all the accounting standards. ICAI had issued 29 accounting standards, out of which 2 accounting standards are deleted. So henceforth we have 27 accounting standards. Clear all of you? Then let's come to Ind AS. So what problem was happening in India? There was no accounting standards. People were doing their own accounting. Same problem persists at world level also. Same problem is there at world level. Hello. Same problem persists at world level. Dubai is following one accounting standard. China is following one. US is following one. Don't you think the problem of non-comparability is there here also? So we wanted a common standard at global level. Global level we wanted same standard. So an effort towards that was IFRS, International Financial Reporting Standards. So IFRS came. So 130, 140 countries came together, they formulated one standard at international level. Now it is job of every country to start following IFRS. To start following IFRS, we had two methods. One was adoption. Adoption is that whatever IFRS they have already formulated, that international body, you also start following blindly. IFRS Mava. Okay. One more option is convergence. You know, economic environment of theirs and ours is different. So we take IFRS, we make some changes required. Whatever is required, we'll keep it. Whatever additionally required, we will add it. Whatever is not required, we will remove it. Then we will start following IFRS. We Indianize the IFRS. So Indianized version of IFRS is called INDAS. All of you clear? That is adoption, one more is convergence. Now INDAS is for global level non-comparability elimination. Are we following both AS and INDAS?
Yes.
In India? Yes. To keep it simple, big companies are following INDAS, small companies are following AS. When I say big companies, who are big companies for this purpose? Any listed entity is supposed to follow INDAS. If you are not listed, then, but if your net worth is more than or equal to 250 crores, then you are supposed to follow INDAS. Either you should be listed, then pakka applicable. If you are not listed, then your net worth, if it is more than or equal to 250 crores, then INDAS is applicable. What is net worth? Asset minus liabilities is net worth. All of it clear? So that's about accounting standards and end of our chapter 1. Okay. Let's go to
Substance over
one more point. Substance, I'll tell you where it comes. Things to be kept in mind. While selecting accounting policy. Based on selecting an accounting policy, what are the things that you should keep in mind? Because accounting policy is an option. 2-3 options you have to do the same accounting. How will you select one option out of the 2-3 options? These are the 3 things that you have to keep in mind. The first one is what? Prudence. Second one is prudent is what? Normal caution or normal wisdom that any person has. When fire comes, everyone will run. No one will do homework with the fire. Correct? No? So you also as an accountant, you know future profits should not be good. Future losses should be good. You also act normally. Don't do any extravaganza things to manipulate the account. Be prudent. Do what a normal person would do in that situation as an accountant. So when selecting also, be prudent. Don't select accounting policy to manipulate accounts. That is called prudent. Second one is, don't account for the form of the transaction, account for the substance of the transaction. Correct? No? For example, preference share capital. Form of preference share capital is capital. So we put it under capital. But substance is, it is exactly like debt, no? If you think about it, for preference share capital we give fixed dividend. For debt also we give fixed interest. That is also repaid. This is also repaid. Then the substance of the transaction is like debt. But we show it under capital. See, whatever we did now was substance over form. Do the accounting for the substance and not the form of it. Third one, whenever you are selecting accounting policy, do it for material items. No. For immaterial items, don't spend time in framing or selecting accounting policies. All of it here. So these are the 3 things that should be kept in mind while selecting accounting policy. These are the 3 things for selecting an accounting policy. That comes under concept. What is completeness? All the transactions should be recorded, should be represented by financial statements. You cannot miss any transactions. All the transactions should be recorded. Is what they're giving as a completeness concept. Clear? So that's about your chapter 1. So let's come to chapter 2. So it's accounting process 1. So the important unit of this chapter is our rectification of errors. It is asked, pakka one 4-mark question at least will come in my opinion, even in this attempt. But before that, it is very important for us to understand the accounting process. So we'll not go in deep, we'll just take some 5 transactions and we'll understand the entire process. Because there's no point in spending time on purchase book or sales book, all that is nonsense. Let's not waste our time on that, okay? Let's solve some crazy stuff later, like final account or a partnership. So journal. So basically accounting process goes like this. First you record it in journal. In journals we have 2 kinds of journal. What are 2 kinds of journals? What is it? One is journal proper and one more is subsidiary books. Correct? Whenever a transaction happens, it has 2 doors to enter into the books of account. One is where journal proper, where journal entries are passed. Subsidiary books, journal entries are not passed. What are the examples of subsidiary books? Sales book, purchase book, sales return book, purchase returns book, cash book, bills receivable book, bills payable. All these are subsidiary and they are helping books. Correct? When you have so many sales happening, you cannot record all the sales in journal proper. For every sale, you have to pass a journal entry. So instead, what I'll do, I'll record the sales in sales book. From sales book, it will go to the next process directly. That is ledger. So what is subsidiary books? Helping books. If you have recurring transactions, come via subsidiary books. Rare transactions will come via journal proper by passing a journal entry. Okay. That's why this journal is also called as book of original entry. Why? Original entry is the book of origin because the transaction is first recorded in journals. Since transactions are first recorded in journals, journal is called as a book of original entry. See, the subsidiary books are also called as specialized journals. See, you can enter into books of accounts either via journal proper or via subsidiary books. Both is not possible. Okay. And journals are recorded in a chronological order, under date wise. Once everything is recorded in journal, we'll go to ledger. Then we'll prepare trial balance. Then we enter into final accounts. We'll understand more about final accounts when we go to final accounts chapter 1. Our first focus is journal, ledger and trial balance. Now basically, how do your journal entry works? You know your accounting equation first of all. Tell me the detailed accounting equation. Capital. We'll take this under profits. Any profits also is added to capital, any losses is subtracted. Then we'll add is equal to assets minus liabilities. If any drawings happen, that is also reduced from capital. You can write that. So capital plus profits or minus losses minus drawings plus liabilities is equal to assets minus liabilities. No matter how many transactions happens, capital equation will always match. It will always be equal. Correct? No? That is the basis of your double entry system. Okay. So just to take an example. Nonsense. Liability is already considered here. 2 to 10 system. So capital is equal to assets minus. This is the basic accounting equation that was detailed. Now give me any transaction just to see that accounting equation works. Owner introduced the capital of 1 lakh. Asset is increasing by 1 lakh. Capital is increasing by. So capital 1 lakh. Asset is 1 lakh. No liability. Is the equation matching? Yes. Then any other transaction. Rent paid 20,000. When you pay rent of 20, cash is reducing by 20. So reducing. So assets becomes liability 0. And you know that rent is an expense. Expense will, we saw here now. Losses should be reduced. Losses are expense. So expense will reduce the capital. Income will increase the capital. So this becomes 80%. All of it clear. Then drawings of 10,000. See, still the accounting equation is matching. Next one, any last transaction. Drawings of 10,000. Drawings will reduce capital also and cash balance also. So minus 10,000 minus. So capital becomes 70. This also becomes. See, still the accounting equation is matching. You want me to take outstanding salary? Okay. Guys, what is outstanding salary? Expense is increasing. So expense will reduce capital. How much is outstanding salary? 5,000. So outstanding salary is an expense that you are booking. So your capital will reduce. Expense will reduce capital, income will increase it. So minus. So this becomes here assets because it's outstanding. Liabilities got increased by 5,000. So this becomes correct. Still the accounting equations match. All of you clear? Then we come to our journal entry. So journal entry we are focusing on modern approach only. Golden approach, just know that 3 rules. Real account. Debit what comes in, credit what goes out. Personal account, debit the receiver, credit the receiver. Nominal account, debit all expenses or losses. So for the sake of questions, you just know it as well. But for framing journal entries, we are always using modern approach. So you know debt click, correct? No. Expense, asset or drawings, increasing debit, decreasing credit. Then liability, income or capital, increasing credit, decreasing debit. Using this, you will pass any journal entries. So let's do one question on journal entry. Not a simple one, because since we have limited time, we'll do journal entry which involves GST questions. What is it? We'll solve the latest RPP. Have you solved the latest RPP? No. Try to tell me true or first, true or false. Trade discount is reduction granted by a supplier from the list price of the goods or services on business considerations for prompt repayment. And what is it?
True, sorry, that was cash.
Hey, nonsense. For prompt payment.
Prompt payment, oh, only a thing,
That is cash discount. Okay, true or false? Hey guys, it's false. Why did I call it as false? From the list price for prompt payment. Cash discount is what we are giving for prompt payment. Trade discount is given at the time of supply. Like that, it's false. Guys, easy 12 marks this is. You should write the reason also. You know, writing the reason. Just negative. Later we'll do other things. Let's see. Theoretical framework. Nonsense. So let's pass journal entries, okay? September 26 article. All of you should fast tell. Let me see your journal entry knowledge. So there was this third question. So I just wanted to discuss. So whenever you change an accounting policy, what are you supposed to do in financial statement? Disclose the fact that you have changed the accounting policies along with the monetary effect. And then how much amounts change? Because whenever you shift from one policy to another policy, your profits will change. So you should also try to put the quantitative effect of change in accounting policy. If it is not possible to calculate, then just disclose the fact. But if possible, give the numerical effect also. Whenever change happens, disclose. And will it have material effect on financial statements? Explain the statement with help of an example. How will you answer this? Take that example only. Maybe when you are valuing FIFO, your inventory was, say, 1 lakh rupees. When you come under WA, inventory became 1 lakh 50. So closing stock increased by 15,000. That will increase your profit by 50,000. Why? Because we know closing stock and profits are directly proportional. More the closing stock, more the profit. Correct or not? So you can write this and tell them that this is how it can have material effect. So based on that only we have one true or false also. See fourth one. When closing inventory is overstated, net income for the accounting period will be understated. False. They are directly proportional. Closing stock increases, profit increases. So it's false. Anyways, let's come to journal entry. Pass a journal entry in each of the following cases. A running business was purchased by Arjun with following assets and liabilities. Entry. Hello. We are purchasing the business. So their assets is becoming our assets. Their liabilities is becoming our. So bank is becoming mine. So asset increasing, debit. So bank account, debit. 70,000. Then land account debit. Then furniture account debit. Then stock development asset increasing. But creditors is a liability. Liability increasing credit. So 2 creditors 35. 2 bank overdraft 70. Now what will you do?
I don't know.
No.
Wait,
Stock? Of course. That's an asset, no? It's an asset coming now.
When you purchase, sale is not
That is under normal circumstances. Here we are, but overtaking, taking over the business only. So here stock can come. But normally what we told was correct. If we purchase stock and normally purchase goods, then stock should not be debited, purchases should be debited.
Through cash account.
Guys, what is the net assets that you got? Calculate.
It is 210,000.
2 lakh, 10 is the net assets you have got. Since you have got net assets of 10 lakh, you have to pay Arjun how much? You have purchased all this from Arjun. So Arjun is supposed to pay 2 lakh 10 because he has given me net assets for 2 lakh 10. So you have to show a payable towards Arjun. Okay. Huh? Sir?
Oh yeah, Arjun is the entrepreneur.
Yeah.
Arjun is the one who's taking over everything.
Okay, purchased
So it will be
by Arjun.
through cash.
So what you can do is purchase consideration PC payable you can 2 lakh. What is purchase consideration? Since he is giving you the business, you have to pay some consideration. That is payable no still to that person from whom we have taken the asset. So it is to purchase consideration payable 2,10,000. You see there also no correct. Something like that only it will be. To capital. What nonsense. Capital. Why? Being commencement of business by Arjun by taking over
What is the commencement of this?
and what has happened is, see, two types. We are already an existing business and we are purchasing the other business. So in that case, the credit will be PC payable. Right? When you are purchasing others' business and when you are commencing, when you are starting only by other people, see, still it is PC payable only. But that PC payable, whatever money is required to buy, that will be funded by whom? For example, here, where is it? So come here. But it's better to be with ICAI only. See, it's two PC payable, no? Later, who will pay this? PC, basically what is happening? PC payable will be debited. And someone has to pay. 2. Cash. Now entity is paying that cash. How much? 2.1 lakh. 2.1. Who would have given that cash? If you are starting this business newly now, who would have given that cash? The owner, no. So whenever owner contributes the capital, entry becomes cash to capital. 2.1 lakh. 2.1. Now if you see, cash gets cancelled. PC payable gets cancelled. Technically it is 2 capital. They have netted it off. You understood, huh? All of you? So you are supposed to pay a PC of 2.1. So you would have paid it via cash. Correct. But who gave that cash? Owner. So cash to capital. So they have netted off the entries like that. That's why directly capital is coming. So now the question is when to use PC payable, when to use capital. If you are taking over the assets to start the business now, credit it with capital. If you are already an existing business and then you took over, put PC payable. You understood the difference. Commencing the business by taking over, credit capital. You are an existing business who is taking over the assets, credit it with purchase consideration payable. Okay. So let us keep it with ICAI only. So it is true. Good point. Second, sold goods to Harpreet for 3,50,000 at a trade discount of 20% and charged IGST at 12%. This is the one. It's a sales. So debtors account debit to sales to IGST. Correct. But we have also got a discount. So whenever trade discount is there, reduce the discount and then calculate GST. So it is Harpreet. For 3,50,000 at trade discount of 20. So 350 minus 20%. It is 2,80,000. 2,80,000 plus 12% GST.
3,20,000.
So what is the total amount I have to receive from Harpreet? It is 3,50,000. 2,80,000 plus 12% is
33,600.
33,000. So total receivable from Harpreet is how much? 3,13,000. 2. Sales is an income increasing credit. Only the taxable value will go to sales. So how much is taxable value? And the GST component is something which is payable towards government will be shown as liability. So output IGST, which is 33,600 means sales. So clear all of you? So whenever trade discount is there, reduce trade discount and calculate GST. Very important. Next one. Goods distributed by way of samples amounted to 35. So whatever you give us, this thing, it's advertisement account debit to purchases. We don't have any purchases before.
Stock is there.
Because if we had purchases, we should have reduced the input also. All of you, if you distribute something by way of free samples, then by purchasing you would have debited GST, no? The input that should have been credited. But here we don't have an earlier purchase, hence the entry L passes. It is advertisement. All. Is it? Of course, no. It's pass a journal entry in each of the following cases. So what is it different? Yeah, but Harpreet is repeated many times. Sandeep became insolvent. Who is Sandeep?
Sir, I think it's all related on that.
It is all. Then who is Sandeep?
Sir, Sandeep 21,000 he come in there. Okay, yeah. Yeah, there's no debt. That's okay, fine.
I think it is Harpreet only. By mistake, they have put Sandeep. No?
Sir, Harpreet is a guy's name on this.
Yeah, that is a difference.
Sir, they told the amount due from Hippo was 21,000.
Sold goods to Harpreet. Harpreet, what boy's name was?
I don't know.
Even I don't know. See, one more common sense thing is, see, Sandeep became insolvent and could pay only 40 paisa. And to determine how much he could pay, I should know the receivable.
That comes to that.
The amount due from him was?
40,000.
Then I think it's an individual case only. Then they are not connected. But it is also there. But till here, we have all the Harpreet. So it's advertisement account debit. How much? Advertisement is an expense increasing debit. Whenever goods are withdrawn by the owner or distributed as sample, whenever goods are going outside other than sales, we generally credit purchases for the outfit. Okay. So we Either narration and all you can manage. Next
Sir,
one.
if you write that entry end of
Which one?
like they are given the transaction that only has narration.
Yeah. They look for narration, they are not judging the narration very seriously. It's okay. Goods of list price 1,40,000 were returned by Harpreet.
Right.
Now there is sales returns. Entry.
Sales return to customer person.
Sales return will be
On that we have to
correct. We should also reverse the.
ICS.
So is it including or what is the case? List price 140. Now guys, list price earlier was 3,50,000. We are also given a discount of 10%, 20%. So here also 140 is list price. So I should take the discounted amount. So 1,40,000 minus 20% is 1 lakh.
12,000.
So I should 1,12,000 is something that should be debited. Then the GST which had credited as payable, that is also reducing. So debit.
It will become input also.
Output payable is reducing. Input comes only when you are purchasing. If the purchase return happens, input will reduce. Don't take it like that. Just because it's getting debited, it's not input. It's reduction of output payable. So output. So this should be calculated on 112 only. So 1,12,000 into 12%. 13,000. 2. Your receivable from Harpreet is reducing. 125. Clear up? All of you. So please, one of the mistakes that you do is don't forget about the discount that you had already given. Don't blindly take 150. That is list price. Over and above list price, we had given a discount of 20%. Next up. Sandeep became insolvent and could pay only 40 paise in a rupee. The amount due from him was 21. So 21 and he gave us only 40 paise in a rupee and that 40%. 60% gone. So we got a cash or bank whatever. Debit 21,000 into 40%.
8,400.
Remaining is bad debts. It's a loss debit.
12,000.
12,000 to Sandeep is receivable is now gone. 21,000. Clear enough? All of it. It's always better to once both run. Okay. Ladies and gentlemen, fast. Capex. 10,000 spent as import duty on machinery purchase. Capex, because it is what initial purchase, directly attributable expense. Then amount received from debtors, operating it is revenues. Cost of testing. Insurance claim received on account of machinery. It's like what? Sale of machinery now. When you receive insurance claim from machinery, it's like sale of machinery, it's IA. So it comes under capital. So that's about it. Zoom on. So let's proceed. So what were we discussing?
Sir, this one we won't get recording classes.
Yeah.
It's in the app.
Hey, the app also, YouTube also.
What, sir? Are you live, sir?
No, we're not doing this.
Sir, you're going like first chapter, second chapter, then third, fourth, or by weightage?
No, weightage in all, it will change.
Okay, so
Now we'll be going in the this thing. So the second step, so we discussed about journal, how the journal entries happen. Okay. So the second step was ledger. Okay. Again, ledger posting is pretty simple. How do we do the ledger posting? For example, let's take this last entry over here example. Say cash on. Bank account is the ledger. Okay. How to post the journal entry? You have to see the entry. If the entry, if that concerned account is debited, then here also entries will come in debit side. So 2. Sandeep account. How much? 21. 8,000. You have to see for how much that account is debited. Cash or bank is debited for 8,000. So all of you understood?
yes, sir.
How the posting comes in Sandeep account?
By bank
Cash bank.
and by bank.
So Sandeep is credited. Here also it should come in credit side. The other 2 accounts, which is cash and
Bank.
how much stuff? 8,400 and 12,600. Clear up? And you know, once we draft these ledger accounts, if it is asset, liability or capital, it should be balanced. Whereas if it is income or expense, that is if they are nominal accounts, it should be transferred to P&L for the calculation of profit or loss. Like that. When will I use subsidiary books instead of journal entries? When the transactions are recurring in nature. For example, all the credit purchases will come in purchase. Will cash purchase come in? No.
Cash.
Because for all the cash transactions we already have cash. So all the credit purchases comes in purchase book, all the credit sales comes in sales. Only credit transactions. If you purchase any furniture or etc. on credit, will that come in purchase book? No. Purchase of any capital asset will not come in purchase. Only normal purchases of goods which are purchasing for the purpose of resale. Only that will come in purchases book. Aita? Yes. Technically, yes. Aita. Here, what you would have done? It is not. See, it's not goodwill. I'll tell you when goodwill comes. Okay. When the net assets that you are getting is more than the consideration that you are paying, then it is what? It's a benefit to you. Then capital reserve will be credited. If you are getting less net assets as compared to the PC, then goodwill will be debited. In this case, that situation will not come. In this entry which we pass, generally assets will be more than liabilities. For the remaining, you credit capital if it is a new business. If it is an existing business, credit purchase consideration payable. There is one question in our study material. I thought, say suppose in this question only, we have got net assets of 2,10,000 rupees, correct? No? And say here PC they have not given. How much is paid on that? Say suppose that is also given. For 2,10,000 net assets, the PC that you have paid is say 3 lakh. You have paid 90,000 rupees more. Why are you paying 90,000 rupees more when the net assets itself is 2,10,000? No, more you are paying because of goodwill, no? So the net assets that you are getting, say assets account debit, is 2 lakh. 10,000. But the PC payable is 3 lakh. So in such a situation, if your PC is more than your net assets, then extra you are paying for goodwill. So goodwill will be debited to the extent of 9. Vice versa. You are getting net assets of 2 lakh 10, but you are supposed to pay PC of only 2 lakh. Now that 10,000 is like an income benefit. No. So what will come? It's a capital profit which goes to capital reserve. In that case, entry would have been assets account debit 2 lakh. To PC payable is
210.
sorry, Ulta. Yeah, assets that you are getting is 2 lakh 10, whereas the PC payable is 2 lakh. So that extra 10,000 is it's like an income, but not regular income. No, it's a one-time income. So we'll put it to capital reserve. All of it clear? So this is how we post. We were discussing about what ledger, income and expense will go to P&L. Asset and liabilities, ledger accounts will be balanced. Now, whenever there are recurring transactions, we use subsidiary books only for credit transactions and only for purchase of goods that are being purchased for resale. Only that will come in the subsidiary books. Okay. Purchase of any capital asset will not come in subsidiary books. That is one thing. Actually, what happens once you pass journal entry or once you do an entry in subsidiary books, the next step will be ledger. Please note how the posting happens. Okay. If journal entry is passed, then posting will happen like this. How we learned in Sunday. If the entry is passed in purchase book, then how will the posting happen to ledger? For example, let's take an example of a transaction. Purchase of normal goods only. Rupees 20,000 from Amit. Okay. Then purchase of goods of rupees 60,000 from Sumit. Okay. Now there are repeated transactions of credit purchases. We will record this in purchase book instead of passing journal entry. So let's enter it in purchase. What is the format you should be doing?
Date particulars,
LF. Then rupees only. Normal. You just record the details of purchase first. No big deal there. So date you will mention. Particulars, you have to write the supplier name. Sorry, supplier name. It is Amit. Then you have to write the description of goods if given. Maybe description of goods is 500 is amount 20,000. 500 units of say 40 rupees each. So your total purchases becomes 20,000. The description of the goods also you have to write. Then second supplier is Sumit. That guy has purchased for 60. So for rupees 120 each. That will be given in the question only. No need to worry. So it comes to 60,000. Okay. So once you list out all the purchases in the purchases book. So what is your total purchases? 80,000. Now tell me how will now directly posting happens in ledger. Either subsidiary book or journal entry. You can choose any one way. Later the step 2 is ledger only. Now, how to post from subsidiary book is what most of the students miss. That's why I'm focusing on this. Because this is very important for rectification of errors. To understand the rectification. So 2 ledgers are, see whenever purchase book posting is concerned, 2 ledgers are coming. Purchases and creditors. Sales book ali, sales and purchase returns ali, purchase returns and creditors. Sales returns ali, Clear? Bills receivable book
Bills receivable to data.
and debtors are considered generally. Okay. Now here, since we are talking about purchase book, one account is purchases account, and one more account is
Creditor.
creditor. We have two different people now. Then, okay. Now what you have to do is, you have to take the total of purchases column first. Total of purchases column is 80, which will come in which side of purchases? Purchase and expense, that is increasing. So posting should happen in debit side. Right? So 2. Sundry supplies, because I cannot pass individual entry for so many supplies. In our example, there is only 2. Imagine in real life there will be so many. So I put it as 2 sundry suppliers or something. It is 80. This is one posting. The total of purchase book I directly took and I posted it here. Now for individual creditors ledger, I will go to their balances. Now Amit's balance is how much? Amit's balance is 20. Now Amit is a liability. Increase in credit. So by purchases 20,000. Similarly, Sumit is you're understanding how the posting happens from subsidiary. Directly it happens like this. Yes. Then this ledger should be closed. Income or expense transferred to P&L. Asset, liability or capital, balance sheet and leave it. Those balances will later go to balance sheet. Before that, trial balance is there. Don't worry. Now one more very important thing you should know is, will we do the same situation? Now purchase book entry ಮಾಡಿದ್ವಿ, later we transferred it to ledger. Will we do the same thing for cash book transaction also? Because in cash book also looks very similar to a ledger, correct? It looks like this only. I'm talking about a single column cash book. Particulars. Then again date. See, technically cash book is a subsidiary book. Any receipts will come in debit side, any payments will come in credit side. Once I record it in cash book, will I again post this to cash ledger? Because technically, purchase book will record again, I posted it in purchases account and creditors account. Similarly, whatever cash I receive, should I again post it to cash account? Not required, no. Just think about it, cash book format is also same. Cash account format is also same. So it will be a duplication of work if you again enter it in cash ledger account. So that's why for cash book we have one exception. The exception is cash book, if you enter in cash book, it is as good as you have entered in subsidiary book also, ledger also. That's why cash book is called both subsidiary and principal book. Now in accounts, the main book, primary book is only ledger as per accounts. Primary book is ledger. Subsidiary books are this journal proper and all these journals, okay? But cash book is both primary and subsidiary because that is cash book also. And again, we will not do a separate ledger posting. We treat cash book only as cash ledger because of which it is both primary and subsidiary book. And again, ledger posting will not happen to cash account. We treat cash book only as cash ledger. All of you understood this one point? Important from your true or false or whatever. Okay.
Cash book is called principal.
Ledgers are what? See, out of all the books that we maintain in accounts, ledger is the primary book. All other are secondary. You are understanding? Technically, cash book should have come to primary or secondary. Normally, because cash book is a subsidiary book. Journal. So it should have come under subsidiary. But since we treat cash book only as cash ledger, now cash book also became cash ledger, so it became primary and subsidiary book. Only cash book has this, what do they call it? Feature or benefit or whatever. Okay. Our journal proper is what? Secondary book only. Our purchase book, sales sheet book, all these are subsidiary books, secondary books. Ledger is only the primary book. Cash book is both because we treat it as ledger also, we treat it as a subsidiary book also. Clear all of you? In these cash books we have single column cash book, double column, triple column cash book. In single column, we have date particulars amount. In double column, date particulars, we have one column for cash receipts, one column for hey, not cash or bank. No.
This one.
So date to receipts.
No. Two column only. It's one column for cash and one column for discount. In two column. So discount allowed will come in debit side of the cash book. Discount received comes in credit side of the cash book. In three column, discount, cash, bank. I thought discount allowed debit side, discount received credit side. All of it clear? All the receipts come in debit side, all the payments come in credit side. I think we can skip it now. Cash book is something you guys can manage. Do you have any doubts there? Okay. But this subsidiary book question which is given in article is an interesting question. I feel that you have to go through this once, though it's purchase. So all of you, what you'll be thinking? Purchase book, just mention the purchases over. But there's an interesting thing here. Just see. Prepare a purchases book from the following transactions of techno computers. So let's go through the transactions and we'll discuss. See, first they have given date, then they have given supplier's name. Who is supplier? Rocket Computers, and it's bought on credit. Only credit purchases should be recorded in purchasing. So this will be recorded. So all that description they have given. Trade discount should be, what should we do for trade discount? It should be reduced. Trade discount will be reduced at the time of supply. Cash discount will be separately recorded as the income. Trade discount will be reduced. See, we also have GST. Now this GST will be calculated on what number? List price minus discount. On that number, GST will be calculated. Freight will be added. All of it clear? But very interesting is you have to see the format. Can you see our so date in particulars LF, the amount column. See, they have separate columns for cost, GST, and freight. Like it looks like. So for GST, freight and all, they have given separate columns. Instead of writing it vertically, here you are putting it horizontal. See, here you have given the description of the goods. Total is 29,000. You have a discount of 10%, which is immediately reduced. It becomes 26,100. GST is calculated on that number 2349. 2349. Then ultimately, freight is added 31,490. Yeah. Actually, we used to do this way only. Just put the details. But in this particular article, they have also given columns for CGST and SGST. So it's better to put it in the format of ICAI. Earlier, we used to do only that one thing. Details, total, minus discount, calculate GST and add freight. So that's why note this. If a similar question appears in your exam, then consider this. Okay?
So it's recommended we write according to what?
Yes. Because there is no given rules for purchase book page. It is all in real life. No, we'll maintain purchase book the way we want because there is no standards. Accounting standard and maintain purchase book like this only. Now I say writing purchase book like this. So now the best chance is what? It's like keep it that only. Keep it safe. Unless you don't have time or something.
So, but it's also that discount. Oh, we should write it in that also.
Wait. Which column?
That CGST and SGST, that column we should write it.
This you are telling, huh?
Yeah, that is in the column we should write
We
it.
have written in last
No, in the material.
cost 2349 freight total amount. They have just written the same thing horizontally once. Not a big deal. What we used to write in vertical format, they have written once in horizontal. So all of you got it. This one observation I wanted to bring to your notice. Okay. So after ledger and subsidiary books and all, we have what? See, what I'm trying to do is in each topic, whichever I feel that whatever is important thing to be said, which you might miss off, that is what I'm telling. Okay. So trial balance. What happens in trial balance? You know, we follow double entry system of accounting. So for every transaction, we have one debit and we have one credit. So while preparing trial balance, what we do? Once the ledger is all prepared, you balance it. No? All the balances will be now taken to trial balance. Like that. All the debit balance ledger accounts will come in debit side, all the credits balance ledger accounts will come in credit side. Now, how to determine whether a ledger account has debit side or debit balance or credit balance? Follow debt sheet only. Like that. And then expense assets drawing have debit balance. Liability, income, capital nature have credit balance. All of it. What are the things to note from exam point of view? I'll ask some questions, you should answer them. Can closing stock come in trial balance? Open. No. Can closing stock come? No. Very important. But under one exception, it can come. What is it? If the purchases that is taken in the trial balance, if it is adjusted purchases, then closing stock can come. See, one logic is why closing stock doesn't come to trial balances. It's already represented by purchases that is there. Opening stock and purchases. Guys, whatever is remaining at the end of the year is from whatever we had in opening stock and purchases. It's already being represented. So if opening stock and purchases is there in trial balance, opening stock and purchases is there in trial balance, then closing stock should not come. If you have reduced that closing stock from purchases, then you have space for closing stock, then closing stock can come in trial balance. What is adjusted purchases? It's total purchases minus closing stock. If adjusted purchases comes in trial balance, then closing stock can come. All of you clear? Done. But one thing, I'll link one point to final accounts from here. If adjusted purchases has come in trial balance, closing stock can come in trial balance, but it will not come in trading account. The beauty of this thing. Understood? You can note this point. If adjusted purchases comes in trial balance, then closing stock can come to trial balance, but it won't come in trading account later. If you consider adjusted purchases. Closing stock can come in trading account only when you take whole purchases. That is one thing you can note. But closing stock in this situation will not come in.
So then, trial balance is write two purchases, right?
Sure.
That time we'll write only the adjusted purchase amount, or we'll add the closing stock.
Trial balance will already be given. In which context are you telling? For final accounts?
Yeah, final. For trading account.
How to show it on that? It depends on you. If you are, say, suppose, now I'll take an example. Say the trial balance is given from final accounts point of view. Your adjusted purchases is 8,000 and closing stock is 2,000. That means total purchases is how much? 10,000. You know that now. If you take 10,000 as purchases in trading account, take closing stock as 2,000 in trading. If you take adjusted purchases only directly as 8, then don't take closing stock while preparing trading account. Same thing, answer will be same. If you want, you gross it up and only you can write. And then take two purchases at 10,000 and show closing stock of 2. Not required. It's okay. That much they will understand. Okay. But you understood now. If adjusted purchases come, and if you take that only as purchases, 8K, then closing stock, no. Only gross purchases bandaga closing stock will come in trade. Clear? But both are ulta. When adjusted purchases comes in trial balance, then closing stock can come. All of you are clear with this point? That's about it. Then what is this in trial balance? Yeah. Simple appa. Can closing step come to trial balance?
After suspension.
Suspend. We'll come to rectification. We have a separate discussion for rectification. Don't worry. What were we telling? Can closing stock come to trial balance? No. But in the trial balance, if you have adjusted purchases, then closing stock can come in trial balance. What is adjusted purchases? Total purchases minus closing. Say total actual purchases that you have done is 10,000. That year's closing stock is 2. 10 minus 2, adjusted purchases becomes 8. If 8K comes in trial balance, closing stock can come in trial balance as 2K. Have we cleared it? If total purchases comes in trial balance as 10K, then closing stock cannot come to trial balance. Clear? Okay?
Because it is already included.
It's already represented by purchases. What is purchased is only closing stock. Again, when we come to trading account, final accounts. If you take adjusted purchases while preparing trading account, that is 8K, closing stock will not come in trading account, credit side. If you take 10K as purchases, then closing stock of 2K will come in trading account. Clear? Simple. Inverse relationship. Okay. So what will happen once you post all the ledger account balances to trial balance? Technically, if you have followed dual aspect correctly, your debit side should be equal to your credit side. If there is any gap because of whatever errors or mistakes, what will happen? The gap will be transferred to suspense account. That suspense account will be treated as a balance sheet item only until the errors are resolved. Once the errors are resolved, suspense account will go. Depends. Now, for example, very good question. Now, when you prepare trial balance, wait a second. Some A account we have debit side, credit side. This is 6,000. Then B account we have 4,000. Then say C account we have 2,000. I've posted all the accounts. Is it matching?
No.
No. This side is 8, that side is 4. So we have a gap of which side? So here the suspense account is coming now.
So this will be a like.
If the balance comes in credit side, it will come in liability side of the balance sheet. If the balance comes in debit side, it will be treated as asset. That's how it will be carried forward to the next year until the errors are resolved. Clear all of you? That's about trial balance. Now, along with this only, the very next important point. Still, nightmare of many students. Which is very simple. If you can understand journal entry very well, you can do this also very well. Okay. Now, let's run through rectification of errors fast, the theoretical part. Okay. While we are preparing, this is the problem. I cannot apparently stand. Okay. Okay. So rectification of errors. So while we are doing this account, there are chances that we will commit some kind of errors. Whatever errors we commit, we have to immediately find it and we have to rectify. That is our job. So the errors are divided into how many parts? 3 parts. Error of omission, error of commission, and error of principal. There is one more kind of error, we'll come back. Compensating error. So first, errors of omission means what? You have forgotten to record the transaction, 1. Or you have recorded the transaction in journal, but you forgot to post it completely in ledger. Imagine, you wrote it in journal. If you don't take it to ledger only, then it will be based in all other further processes. So, omission error, forgetting to record or forgetting to post it to ledger once it is recorded. All of it clear? That is error of omission. When I said that while posting you forgot, you have forgotten both the sides. For example, let's take an example of a credit sale. What is the entry for credit sales? Debtors account debit to sales. So once you pass this entry should be posted in debtors account also, it should be posted in sales. You forgot to post it in both. That is error of omission. If you just post it to debtors and forget to post it in creditors, now it becomes partial omission. All of it clear. Next, error of commission. Let's come to error of principle first. Error of principle. Here what you have done is entries and all debit credit mathematically the dual aspect everything is correct. But the thing is you have made an error in applying the accounting principles that you have learned. For example, when you purchase a furniture, the entry of the passes furniture account debit to bank, but you did purchase account debit to bank. See, double entry is correct only. There is one debit, there is one credit. But the way you have applied, you have treated a capital expenditure as a revenue expenditure. You have erred in applying the accounting knowledge that you have. These are errors of principle. Okay. Then we have error of commission. How I classify error of commission is all the silly mistakes. Commission. While doing or while passing the entries, if you do silly mistakes, all kind of silly mistakes will come under error of commission. For example, you posted wrongly, you posted it to wrong account, you totaled the purchase book wrongly, or you totaled the purchase book correctly, but while posting you made a wrong number, and you have posted it to a wrong account. All these silly mistakes will come to error of commission. And by listening to the error, you will come to know it is silly mistake. Then what we have? We have compensating errors. What is compensating errors?
Both the sides compensate.
Before understanding compensating error, we divided all kinds of errors into 4 parts. No? I am doing the further classification, and I am classifying errors into 2 parts only. This is my classification, which is single-sided error. See, be it any kind of error of commission, etc. That is okay. That is one classification. This is our classification. Single-sided error and so what does this mean? Single-sided error. See, no matter what is the transaction, okay, there is one debit and there is one credit of equal amount. Yes or no? Debtors to sales. Debit 5,000, credit 5,000. Okay. Now when you have made an error, but the debit is equal to credit. I am not worrying about the number. You have made an error and debit is equal to credit still. Now that becomes a double-sided error. Like that. Single-sided error, you have made an error. Like that. But that is affecting only one side. For example, there was a credit sales of 10,000. So technically entry should have been debtors account debit to sales 10,000, 10,000. But what did we do? Debtors account debit 5. To sales 10. Here what is happening? Debit is not equal to credit. You're understanding? This is called single-sided errors. One of them is correct or one of them is wrong. Basically, debit is not equal to credit. You have made an error, but debit is equal to credit. That becomes double-sided. Now tell me one common sense question. Will single-sided error leads to suspense account? Double-sided error leads to suspense account. Single-sided, because when will suspense account come? When debit is not matching to credit. Debit will not match with credit in single-sided error. So this will lead to creation of suspense. Double-sided errors will not lead to creation of suspense. Yes or no? No suspense. See, now we'll understand what is compensating error. It is like I have committed 2 single-sided error, which becomes a double-sided error coincidentally. And I'll take an example. Say suppose there was one purchase of 5,000 rupees. Okay, credit purchase. Entry is what? Purchase to creditors. It was 5. You should have recorded 5. What you have recorded as Purchase you have recorded as 10. But creditors you have recorded correctly. Here the posting that has happened is 5. Actually it is what? Single sided error. Debit is not equal to credit. There is one more purchase which has happened for actually 5,000. I thought. But purchase account is actually debited for 5. But here ulta. Creditors is credited for mistake. Actually purchase was 5,000, but you did a mistake in creditors posting. Now both are single sided errors. But if you put a small trial balance for these errors, debit, credit, what will happen? Purchase total is 15k and creditors the liability 5k. This is both the matching up. See what happened? One single sided error compensated, another single sided error, and trial balance is matching. Technically, single sided errors are revealing errors. If single sided error is committed, it will be revealed in trial balance. How? Trial balance will not tally. Double sided errors are not revealed because their debit is equal to credit. Ultimately, trial balance will match. Now tell me one question based on all this. If a trial balance of anything matches, does that mean we don't have any errors? No. It only means that your debit is equal to credit. It doesn't mean that you have not made any errors. What if you have done double sided errors? Still trial balance will tally. What if you have done error of principle? Still the trial balance will tally. All of it clear? This concept. And also to understand, it is very important for you to know how the posting happened from subsidiary to ledger. There we did know. Amit Sumit. That understanding is very important to solve these ROA. So did you understand that part first? Amit Sumit. When you record a transaction in subsidiary book, how is it posted to ledger? We understood that? Okay. Then one more thing that you should know from rectification of errors point of view is when is the error detected? The timing of error detected can be divided into how many parts? 3 parts. One is before preparation of trial balance. One is and one more is after final accounts. And once you have closed this year, okay, and you closed this year, but the errors pertaining to this year was detected at a later years. Okay. It is for you to put the right journal entry when you are detecting the error is also very important. Okay. Let's take one example and we'll understand how the entries will change. Okay. Any famous example you would like to give me? Anything? For now, just to explain, we'll solve some questions later. Yaadhu question.
Yes, sir.
What? For this rectification of any adjustment you remember. That comes in final accounts, no? Somewhere. Overcasting of cash flow. No. Wait. First we have to understand these 3 things. No, wait.
Sales includes.
No, I will not wait. We'll do that. All that we'll do later in problems. Now for understanding. So we'll take purchase of office furniture wrongly debited to purchase. Okay. So whenever we are doing the rectification, first what you have to do, write the correct entry. And what should have been the correct entry for this transaction? So when you purchase a furniture, what is the correct entry? Its furniture is an asset increasing debit. Furniture account debit. 2. A cash. Okay, we'll take it as cash purchase. So it comes to say 10,000. 10,000. Correct? That should have been the correct entry. But what is actually happened? You have debited purchase account debit cash. So that becomes one very important assumption which student don't focus on in rectification of errors, but that forms part of very basic, but they forget. If that, okay, whenever the question is telling about something, only that account is wrong. That means the other account is posted correctly. Now they did not tell anything about cash flow in the question. So what is your assumption on that? Some people will mistake their own thing. I thought. So your assumption is the other account entry has happened properly if nothing is told about that. I thought. For this rule there is only one exception which we'll discuss when that entry comes. But normally what is the assumption? If they are not talking about other account, then the other account is posted. Now let's rectify. See, in both the case, cash account is credited, so let's not touch cash. Furniture should have been actually debited. Purchases is wrongly debited. So debit the correct account, credit the wrong account to reverse the effect. So this becomes furniture account debit to Kera. Okay. So generally, now tell me, these are the nature. Is it a single-sided error or double-sided error? Hey, just see that. The error, a double-sided. No. How to judge is, see the actual entry. And what they have done. In actual entry, if debit is equal to credit, it's a double-sided error. In actual entry, if debit is not equal to credit, it's a single-sided error. See, if it is a double-sided error, then the rectification in all the three stages will be same. Three stages were there now, before trial balance, after trial balance, and after final balance. All the three will be same if the error is double-sided. Only one thing is, if the error is detected here, see these two are same, no doubt. In double-sided. For after final accounts, still the entry is same, but only one small change you have to do. What is that change? In the rectification entry, if you have any nominal account, and then nominal account, any income or expense account, if you have a rectification entry, that should be replaced with profit and loss adjustment. Now this becomes what? If it was found out, if the errors was detected in the next year, then the entry would have been furniture account debit to P&L adjustment account. Because purchases is the only nominal. There is one change that you have to do in case of double-sided errors. Or else for all the three stages, rectification for double-sided errors entry will be same, except for this one thing in AFA. Are we clear here? Now let's take one example of a single-sided error.
So then the rectification if you identify what we can actual entry in reverse over to actual entry reverse over to cancel budget.
Okay, what is it?
So
Come here.
actual entry reverse over to
Cash to purchases.
cash to purchase.
Correct.
Cash cancel budget.
But why? It's very simple. No, okay, you are asking me how to pass that RE. See RE. Rectification entry have to pass. What correct entry is furniture to cash. To cash correct credit agಬೇಕು. Actual entry ಏನಾಗಿದೆ cash ಗೆ?
Purchase to cash.
Cash credit ಆಗಿದೆ actual entry ನ. So in actual entry also cash is credited. In the correct entry also cash is credited. Don't touch it only. Now what is the problem? Cash, so we don't have problem. What is the problem then? Instead of furniture, purchases is debited. So I don't want purchases to be debited. So to reverse the effect, credit purchases. And what should be actually debited? Furniture. So debit furniture. I understand what you are telling, but this is much more simpler. Okay. So what he is telling is, what is the actual entry to be passed to? Furniture to cash. But what is the actual entry passed? Purchase to cash. We have to technically reverse it now. So cash to purchases. So rectification becomes is what he is telling. Correct one. Same answer, two different perspectives. Okay. Now let's take an example of a single-sided error. Any single-sided error. We take overcasting of purchase book by rupees 10,000. Now what do you understand by this error? This is a subsidiary book error. So once you enter all the transactions in subsidiary book, next we'll go for ledger. How to post it in purchases account? You will total the subsidiary book. While doing that, actual total was 10. So actual total was say 1 lakh. But you have totaled it to be 1,10,000. The totaling has become increased by 10 by mistake. Actually it was 1 lakh, but you have totaled it to be 1,10,000. Now what happens? In purchases account it will be posted as 1,10,000 now. So let's see here. Correct entry should have been 1 lakh. Both purchase and purchase account also should have been debited as 1 lakh technically. To creditors also should have been posted as 1 lakh. But what happened in actual entry? Purchase will now be posted for 1 lakh. But do you think creditors also mistake would have happened? You remember how the subsidiary book posting happened? Purchase is total separate, then for each creditor I posted separate. That means creditor posting would have happened correctly. That means creditor's posting is, this is the problem. So single set error, double set error. How to rectify this? Very simple. Creditor should have been credited for 1 lakh. It is credited for 1 lakh. Don't touch creditor. Then what is the problem? Purchase. Purchase should have been debited for only 1 lakh, but it is over debited by 10,000. So what should I do? Reduce it. To reduce purchases, credit to purchases 10,000. Okay, I credited purchases. What to debit now? The problem is this is a single-sided error. If the error has happened in one side, how can I rectify it two-sided? Not possible. So actually, I don't have any other account to use. Now, what to put here depends on where is the detection of errors happening. If the detection of error is happening before trial balance, then I don't have any account to use. Then what will you do? Just mention the reason. Overcasting of. It's not an account. You're just mentioning the reason because you don't have any other account to use. So it is. Okay. This entry is passed when it is identified before trial. If it is identified after trial balance, now you know this is a one-sided error. So this would have created a difference in trial balance. So you would have transferred that difference to suspense. Now I have an account to use. That is suspense. So entry becomes suspense to suspense to by how much? 10,000. Okay. If it was identified after final accounts, then same entry. But you know for nominal we have to use P&L adjustment. So purchase is a nominal. So it becomes suspense account to P&L.
Rightfully speaking, if instead of subsidiary books, if they only follow the journal way, then single-sided errors won't happen.
Because while writing only we do debit and credit. Yeah, fair. Before. What we did? See, before trial balance, I credited purchases because it was more by 10,000. So I credited purchases 10. I reduced it. What to debit? I cannot use creditors because creditors account is posted correctly. I cannot use creditors. So technically, since it's a one-sided error, I have no account to use to rectify before trial balance. So what I do is I just write the reason. What was the reason? The purchase book was overcasted. So I write the reason and I will post. There is no account to use before trial balance. After trial balance, I have suspense account to use because suspense account is created out of one-sided errors. After final accounts, same thing. I have suspense account to use because suspense account will be carried forward throughout the years until the errors are rectified. That day all the errors are rectified, suspense account will automatically go. It becomes zero. All of it clear?
So,
Now let's take some examples and we'll understand.
class
Okay. So trial balance of Mr. Sarvesh Kumar as on 31st March 24 did not tally and the difference was posted to suspense account. The fact that we have suspense account means we have single-sided errors. On the scrutiny of the books, the following errors were detected. You are required to pass necessary journal entries with narrations to rectify the above errors. First thing you have to answer yourself is where is the error being detected? BTB, ATB, AFA. It is ATB. AFA either they would have told correctly. Okay, it's ATB after trial. Next. The total of sales return books for January 24 has been cast short by 1000. Now you know all these undercasting, overcasting are one-sided errors. Sales return has been casted short by
1000.
So here directly we can pass a rectification. So sales return if you are increasing, so should I increase the sales return or decrease the sales return? It's undercasted, so I have to increase. So to increase it, what should I do? Debit sales return. Debit 1000. You cannot touch debtors now because debtors will be correctly posted. Just like what we did for overcast of purchase. The creditors was correctly posted now. Here also debtors would have been posted correctly. Sales return was posted wrongly. It was undercast, so I increased it by 1000. 2. Since it is ATB, suspense account is already created. I will use. Hey, any doubts with respect to this? You wanted to tell me in that format, CRE.
Sir, one question, we just wrote sales return or debit. We didn't have any to
Okay, that is BTP.
Yeah.
BTP, nothing will be there. It is sales returns account debit, nothing. Correct. You just write the reason. ATB, you have suspense account to use now. Second. Any doubts here, please? Okay, super. Next. Freight paid for installation of a machine 6,500 was posted to the fleet account as 5,600.
Yeah.
Corrected this machine to
So we have the amount difference also. So whenever all these, there are two errors actually. Correct. So let's put the correct entry. See, if you have paid freight towards purchase of machinery, correct entry should have been, it should be treated as a capital expenditure, directly attributable expense. So technically debit.
to freight.
No, we are doing correct entry. Machinery account debit to cash or bank account. How much was the correct one? 6,005. 6,000. Actual entry. Nonsense fellow, instead of debiting machinery, they have debited freight. That took 5,602. Now the very important question is, when I write to bank here, is it 6,500 or 5,000? It should be 6,500. That is where students miss it. Other account ಬಗ್ಗೆ ಏನು ಹೇಳಿಲ್ಲ ಅಂದ್ರೆ what is your assumption? That is posted correctly. What was the correct number? 6,500. This is where most of them get confused. Now, this became single-sided or double-sided? Single-sided because debit is not equal to credit. So please observe this, is very important. Now, rectification entry.
Machinery to suspense to freight.
Now, machinery account was supposed to be actually debited, which is not debited. So, debit Machinery account for how much?
6,000.
Freight account is wrongly debited, so credited. So to freight,
5,600. Two suspects.
will you touch bank account? No, bank account is rightly credited. It's don't do it. Do you still have a balance of
900, that is suspect.
that is that single-sided effect which should go to suspects because this is 80. All of you got it? Next one. Oh, we had a. Sure, we should have done this one. Goods of the value 2,500 returned by a customer were entered in sales demo and posted therefrom to the credit office account. So it is a sales return from customer. How much? 2,500. So what should have been the correct entry? So it should have been sales return account debit to customer account. How much?
2,500.
2,500, 2,500. But what is the actual entry?
Sales.
First of all, it was entered in sales daybook. If you enter it in sales daybook, sales return will be treated as sales. So technically, you are doing debtors to sales.
Yeah.
Debtors from the customer to sales. Why? Because you are entered in sales daybook. The transaction will be accounted as customer to sales, but posted therefrom to the credit. However, the customer's account it has been credited. So that means. See, please understand how I am interpreting this. Since it went to sales daybook, the entry became customer to sales. But further they told in the question that customer was credited. So immediately what happened? This went to careful. Clear? Sales account, nothing has happened. That has been, they did not tell anything about sales. That has been credited only. So what is the amount? 2,500. So that is the actual entry. Hey, all of you clear? Huh?
What is credited?
That is the error. That's why we call it single-sided error. You did not ask this question when I wrote two different numbers in actual entry in this question. How is that possible then? That is the error, no? Then it will have been debited. You will treat it as customer to sales and then rectify it. Clear? Huh? Now one of your friends asked this question. Sir, if this last line, if this was not there, then I would have kept it as customer to sales actually. But they don't. It went to sales, they go. So transaction is recorded as customer to sales, like any other credit sale. But customer is recorded properly. So I made it 2 sales, 2 customers. Customer is credited it seems. Clear?
Then rectification entry would be
Yeah.
returns to sales.
Yes. So rectification becomes. See, customer account should have been credited, customer account is credited. No need for us to worry. Customer don't touch. Sales return account is to be rightly debited. So let's debit. Debit 2,500. Sales account is wrongly credited, which is wrong. So to rectify it, debit. So sales account, debit 2,500. Now what to credit? Customer? No, customer is already correct. So we will credit. All of you clear? Any doubts? What are?
Sir, 1 minute. Okay, sir. Sir, the entry was sales to customer, right?
Yes.
So,
Hey, customer to sales.
sir, they have told customer was credited, no?
Later.
Okay, the correct entry should have, the wrong entry should have been correct was customer to sales. But then what they have done is sales to customer.
No, that is the mistake you guys are doing. See, but read the question one by one. First it was sales return. So technically it should have been sales return to customer. But they have passed it through
Sales.
sales to, and it should be recorded as good as sales. So entry became customers to sales. That has to sales or customer to sales. Then they told, no, customer account is credited properly.
Oh, they didn't say sales.
They did not tell. So keep the status like that. So this became 2 sales, 2 customers. Understanding?
Sir. What was 2 suspects?
Any doubts? Ladies? It's okay. Girls should also ask. Tell. No, shall I proceed? Next. 18,000 paid for purchase of old motorcycle for personal use of Mr. Sarvesh for Sarvesh Kumar was debited to conveyance account. Yeah, Sarvesh is the owner. Okay. Hey, if he has paid 18,000 for the purchase of old motorcycle for personal use, what is the correct date? Again, if the firm has paid for it, then it is drawing. So, correct entry should have been
Drawings to
cash. Correct. If we have paid, if the firm has paid, then correct entry becomes drawings to $18,000. But what is actual entry? Instead of debiting drawings, they have debited conveyance. So it has become $18,000. So rectification entry. So cash is correct, don't touch. Debit drawings and credit the wrongly debited account conveyance. Clear? Also, next. A purchase of 6,700 had been posted to creditor's account as 6,000. So what is the correct entry?
purchase 6,000.
Purchase account debit 6,700 to creditors. Purchases to creditors debit 6,700. 6,700. Actual entry.
Purchase to creditors. That is 6.5.
Purchase account debit is 6,700. And only creditor account is wrong. Two. So rectification entry. Have to reduce purchases by. Purchases is correct. Have to increase creditors by 700. So 2 creditors. So I have no account to debit. I will use suspense. Clear?
Sir, in the creditors same with that. But amount extra
How? Next. Receipt of cash 5,000 from Mr. Avinash was posted to the debit office account. Nice question, yeah. All next level stuff only they have given. Tell me. When you receive cash from Avinash, what should have been the correct date? Should have been cash amount to Avinash. How much? How much is that? 5,000. But then what happened? But was posted to the debit officer. So actual entry See, above cash account, they did not tell anything. So you keep the cash account correct. Cash account debit 5,000. Now Avinash account is also debited. So 2. It's a one-sided error, so I will use suspense account 10,000. All of you clear? Please understand that assumption. Other account ಬಗ್ಗೆ ಏನು ಹೇಳಿಲ್ಲ ಅಂದ್ರೆ sorry sir. You know, cash account debit 5,000. Avinash is debited. Oh, it's actual entry. I am in some other zone only. So actual entry is cash account debit 5, Avinash account debit 5. Now rectification. Cash account is debited, don't touch it. Then Avinash should have been credited. So credited. How much? How much? 10,000. Why guys? The double effect will come because he was supposed to be credited, but he's wrongly debited. Now to rectify, you need double effect. 5 into 2, 10,000 and debit. Hey, don't touch cash. Cash is correct. All of you clear? Sorry.
Sir, he wrote to ask.
What?
He asked if you didn't go to Sarjapur.
Hey, nonsense. Next. 7th one. All of you understood? This last entry. Hello? Clear? Can I go to the next? A check for 2,500 received from Alu had been dishonored and was posted to the debit of Mr. Ashok. So check dishonor. Check receive again. That you once received, now dishonor. What is the correct entry for dishonor? Correct entry for dishonor is ulta of received. When you receive the check entry, bank to Alok. Dishonor at the reverse entry. Alok to. So correct entry for dishonor is how much is the amount? 2,000. Okay. Either actual entry. What has happened? Was posted to the debit of Mr. Ashok. So instead of Alok, they have debited. So single sided error, double sided error. What? Double sided. So no suspense account will come. So entry. Bank is correct, don't do anything. Alok should have been rightly debited. Hey, Ashok is wrongly debited, we have to credit. Okay. Next. Sale of 8,500 to Mr. Deepak was recorded in the sales book correctly, but while posting his ledger, credited to his account. Tell me.
Sales to Mr.
Deepak
sales.
So correct entry is
Deepak to sales. Two sales, two.
Deepak to sales is 8,500. Actual entry.
Two sales, two Deepak.
So what has happened? His account is credited, but they have not told anything about sales. So actual entry becomes what? 2 sales. That means sales is correct. Sales is credited only 8,500. 2 Deepak account 8,500. So rectification entry is Deepak should be debited. Effect is twice because it should have been debited is wrongly credited. So effect becomes 70. Sales we cannot touch because in both the cases it is credited. So 2. Hey, what chiller stuff, no?
Nice, like this it comes up in exam.
Hey, that is one of the toughest questions from our way. Yeah, we are doing it very easily.
Sir, you come off, sir. Sir, you come back.
I learned it right now instead. Very good idea. Next, 9th one. The total of discount allowed column in the cash book for the month of December amounting to 3,800 was not posted.
Under casting also.
It's omission basically. Discount is not recorded in the cash book. So if it is not recorded in the cash book, it will not be taken to the discount allowed lecture also. That means my discount allowed is under cost. Now what should I do as part of rectification?
Record.
Discount allowed I should record, so expense increase. Debit, discount allowed. What to credit? See, they are only talking about discount allowed. That means the other aspect
It's correct.
is correct. Okay. Was not posted. See, other posting will be correct. You are right. So, directly you can write rectification. How are you sure that the other account posting is correct? Because it is actually entered in discount allowed column, but it is not posted to the ledger. So, discount allowed ledger is not posted. The other concerned ledger, for example, discount allowed on the debtor ledger. Debtor ledger numbers are correct. So, therefore, I will book the discount allowed now. And then not recorded means? Tell. Discount allowed account debit to? Wait. All of you understood this entry? Discount allowed is not posted. Other entries is posted correct. Tell. I'll tell you with an example. Say suppose one customer, he has given me, the balance he is supposed to give me is 12,000, but he has given 10,000 rupees in full settlement. So discount is 2. What is the entry you would have passed? Cash account debit 10,000. Discount allowed debit 2. Debtors is reducing. Correct. So technically debtors should be credited for 12. But if you have forgotten to record the discount only in the cash book, then the entry that you would have done is cash account debit 10. So to debtors also it would have happened 10 only, because you forgot to record the discount. Avana it becomes a double-sided error. You are understanding? Now I have to account for it completely. Rectification entry becomes record the discount now. Discount account debit 2,000 to reduce debtors by 2,000. Discount account debit to debtors. Omission, like omission. If you forget, here what has happened in this question? You have recorded in cash book discount column, but from discount column it should be posted to discount ledger. No, that is missing. But the debtors and all have happened correctly. They are posted. Okay. Next. Sale of old office table for 2,200 treated as sale of goods.
Treated as the capex.
Capital.
Correct. Correct entry.
Cash to office table.
It's cash account debit to
Table.
office furniture. Correct. Cash is an asset increasing debit. Office furniture is an asset decreasing debit. It's a capital this thing. 2,200, 2,000. But what is the actual entry cost? They treated it as normal sales. So they did cash account debit to so rectification becomes don't touch cash, it's already collected. So office furniture should actually be credited. Aita? And sales account is wrongly credited, debited. All is clear? So with that we are done with this question. Ida. You have sold office furniture, which is a capital asset, but you have treated it as normal sales. And then you normal mix market. You have treated it as normal sale of goods. So what is the correct entry when you sell a furniture? Furniture is your fixed asset. So cash is an asset increasing debit, you got money. Office furniture is an asset decreasing credit. That should have been the correct entry. But what happened in action? You have treated as sales. When you make cash sales, what is the entry? Cash account debit to sales and income increasing credit. Then the rectification. Cash is debited in both the things, no need to worry. Office furniture was supposed to be rightly credited. So I credited furniture. Sales was wrongly credited. So I debited it. Sales account debit to office furniture account 2200, 2200. Okay. Any doubts in there? Tell.
Sir, sales and debit
Again, wrongly credit ಆಗಿದೆ. Sales credit ಆಗ್ಬೇಕಿತ್ತು correct ಆಗಿ. Sales is what? Income. Increasing credit. But was it the sales? No, it was sale of furniture. Furniture credit ಆಗ್ಬೇಕಿತ್ತು. ಈಗ sales ನ credit ಮಾಡ್ಬಿಟ್ಟಿದೆ. ಅದನ್ನ debit ಮಾಡಿ. All of it clear? So there's also an RTP question here lately. But we'll see if there's any interesting thing we'll do or else we'll not. Any interesting adjustment.
So the GST.
Which one? 7th one. But for that we should have known the earlier ones also.
First entry is
Hey, no need. Okay. Do the 7th one, guys. It's not related to previous ones. We'll do the 7th one. All of you, this is a question from September 26th article.
26.
Latest article. So, what September 26th paper they'll give up. Goods costing 15,000 sold to a customer were returned by. The goods were received back into inventory, but no entry was passed in the books. So it's a error of omission.
Okay.
So CGST is 9% on the original cost.
Okay.
Entry direct just record that entry. The error is rectified. Entry is what can be rectified.
Entry, there is no entry.
Sales return alva. This one 7th
You
one.
just have to give the entry, right?
Asте.
Sales return.
Passing the entry is rectification entry in error of omission. So
Sales return.
sales return account debit 15,000. That output GST would have credited during sales. Now should be reversed. Now should be reversed. So debit output CGST, debit output SGST to
Two customers.
to customers. Correct? So numbers we want. Sales return. Here it's only taxable value. How much is output CGST? 15,000 into 9%.
1,350.
Output SGST debit 2. That's right. 2
Customer.
account. It is 1670. 17,000. All of it clear? Okay, what chiller stuff only, no?
Oh, crazy. Sir, you will do one more thing.
No, don't have any other job. No? Bukkali.
Sir,
Hey, wait.
okay, sir.
Okay, the stall is.
So Brijesh is saying he has some doubt. Like
Tell that. What's the doubt?
he texted me 1 minute.
No, you're starting here, I guess. Tell Brijesh.
Sir, that's me.
Sorry.
That's not me.
It's not you.
What you do?
Then who da? Yeah.
Sir, from day one he's doing that only. Even in accounts teacher, I mean law and mathematics also same thing he'll do, sir. He'll come from Deepika Padukone IT and sir. Yeah. He thinks we are so dumb.
Okay. So last this 10th one will do. He has one entry. We'll do that. Cash paid to creditor Naveen Kumar 9,800 was correctly entered in the cash book but omitted from his personal.
Cash. Yeah. So Naveen
Forgot.
Correct entry.
Naveen to cash. Naveen to cash. Only two cash.
Actual entries.
So Naveen
In the cash book, enter the cash is credited. So to
cash.
cash, how much? 9,800, but not at all posted in this. So it becomes so it's a partial omission. So rectification entries. Naveen to suspense 9,800. So all of you clear now? Any other term? He had one which one? Okay, just tell me the entry.
Bank debt of 1,560 had been written off and the provision for doubtful debt should have been maintained at 10% of
We give the question. I don't think I could have opened it here only. No, wait, just a second. Page number 82.
Who's your highest?
Which one? Okay.
fifth question.
What's your
Fifth. Okay. G. Okay, guys. Let's do this. Very important one only actually. A bad debt of 1,560. Hey, all of you, focus here. Important one only as pointed out. Bad debt of 1,560 had not been written off, and provision for doubtful debt should have been maintained at 10% of trade receivables, which are shown in the trial balance as 23,390 with a credit provision for bad debts at 2320. So there is already a provision for bad debts of 2320. And there's actually a bad debts of 1,560 which is not yet written off. We have to write it off. Then again we have to maintain 10% of
2320 only 10%.
Hey, no. 10% of trade receivables have to maintain. Trade receivables are E number.
So water balance is there.
That we have to reduce. And the earlier entries would have affected data, but we'll come there. First we'll understand. First of all, bad debts is not written off. Correct? So there is two ways you can solve this. First, write off the bad debts. So entry. When you write off the bad debts is not written off. So bad debts is an expense. Two. So first write off the debtors. How much? 1560. 1000. Did you write off the debtors? Yes, I did the first job.
Write off is cancel out.
Yes, because they became bad, no?
Yeah.
So you have to write them off. Now let's find out the new debtor balance. What is the new debtor balance? Actual balance was 23. 390. Just now you wrote off debtors by 1560. So minus. And what has happened? Now one more thing. In this question, there have been other adjustments above where you have touched the debtors. For example, can you see the solution of this question? All of it. So adjustment D. So tell me what is the rectification for this? A credit sale of 1470 had been debited to a customer account at 1740. I thought we would have passed one rectification. What is it? Suspense account to customer and debtors only here. Debtors. How much? 2. Then one more. That's all. Correct. Now here, as part of the fourth question, you have reduced the debtors by 270. Correct. So this also to be reduced. So now, what is the actual debtors? This is from 0.4. 21. 1560 you wrote off now. And 270 have written off in and reduced in point number 4. The new debtors is 21,560. Of this, 10% have to maintain. So into, so that comes to, this is the provision that I have to maintain. But right now we already have a provision of 2000. So it's already more. I am supposed to maintain 2156, but it has become 2320. Should I reduce or increase that? Reduce it. Now scientific becomes provision account debit to P&L. Always remember, to increase provision entry is P&L account debit to provision for bad debts is the entry to increase the provision. To decrease the provision, it is provision account debit to P&L. Here we have to decrease the provision. So, two. Now how much guys? 2320 minus it becomes 164. So I have to reduce my provision by 164. No need to increase the provision. These are the two entries you will pass as part of rectification. All of you clear? First you wrote off the bad debts, then you maintain the provision. Okay? So any other doubts in rectification of errors? Can we go to the next chapter? Or we'll solve one more question. It's okay. This is being done for you. This guy, one more doubt. E. Okay, guys, he's asking for E. Tell me. A vehicle bought originally for 7,000 4 years ago and depreciated to 1,200 has been sold for 1,500. And then when you bought it was 7,000. Over 4 years, you have given depreciation and you have bought the carrying amount to 1,200. Something worth 1,200 now you have sold it for 1,500. So there is a profit on sale of 300. But you have not passed any entries other than in the bank account had been passed to the books in the big picture, but no entries other than in the bank. Only bank account you have passed. No other entry you have, no other account you have touched. So let's see. So first of all, what should have been the correct entry? So whenever you sell Alba, how much money you got? 1,000. So bank account to be debited for 1,000. Since you are selling the vehicle, that asset is reducing. So 2. How much is reducing? Its book value is only 1,200. So remaining is which profit on sale, income increasing credit. This is the correct. Actually,
Only bank.
we have only debited.
It's only suspense here.
Ishte. 2, nothing. So, rectifying entry,
Suspense to waivers.
bank debited actually also collected. So, don't touch. So, debit. And what should be rightly credited? To vehicle, 1200. To profit on sale, 300. Clear? So done? Shall we go to the next one? Yes. So please make sure that you go through the questions which is there in the document that I've sent. Okay. It's all same only, but you go through.
So you
it.
send documents for all the.
Yeah. Lottery. So next, let's go to
Yes.
BIs. Again, I think this will be a chiller chapter. This one you would have
So
found.
module 1 itself is easy. Module 2 on the
So do you think that we have to spend more time on?
we'll solve 2 or 3 problems per each chapter and we'll move.
Okay, we do it. You're not skipping. Do you want me to spend more time on module 2?
Yeah,
Yes.
obviously.
Yes.
Sir, module 1, incomplete accounts I didn't touch also, it's like that. I start and getting confused.
We'll complete this but we'll give more importance.
Sir, by tomorrow we can finish module 1.
Yeah,
Then 2.5 days will be there.
that is my plan also.
Corporate partnership is still doable, companies is doable.
Only? Okay. Even there, partnership is doable, huh?
Yes, sir.
So partnership we have been doing it from POC, so we have an
It's
idea.
okay. Partnership is doable. Company has not, of course.
It's a journal entry.
Ah.
But that also.
For company accounts,
Yes.
what is that? Children? Allah, we will go through revision, no doubt.
So just more focus on that 4 chapters.
Which is
And all this.
Incompleted NPS.
incomplete.
NPS.
How's okay. Then I structure it in such a way that it should be of some use to you. Okay.
Sir, 10 minutes.
Okay. 10 minutes, Allah, 5 minutes.
Round off, sir. 15 minutes.
Sir, 12:55 will be here, 1 o'clock.
8.
10 o'clock we will start.
So let's start with bank reconciliation statement. One of the easy topics, easy to score. So no thinking of leaving it. Okay. So why do we prepare bank reconciliation statement? So there will be technically this passbook is something which is maintained by bank and given to us. And whatever transaction happens in our bank account, we also record that in bank column of the cash book. Yes or no? So technically the cash book where we are recording the bank transactions, that balance and the balance that is coming in passbook, technically that they should match because both are same. Passbook is prepared by bank, cash book is prepared by us. Technically it should match, but for various reasons it will not match. So we prepare a statement stating what is the difference and what is the reason why there is a difference. So we prepare one reconciliation statement. We'll take the balance of the cash book, we add or subtract the required items and we arrive at balance of passbook, showing the differences as to why there is a gap. Okay, that is BFS. Now, what is the reason why which we'll be having these differences? There are 3 reasons. First is timing difference, second is transaction difference, and third is errors. Timing difference, basically the classic example is check issued but not presented, or check received but we have not deposited. Now, what happens? I have issued the check to my supplier. To my supplier, I have issued. The moment I issue, I would have recorded the entry. So my bank balance in cash book will reduce because the moment I give the check, I will record the entry. But when will the money leave the bank account? Money will leave the bank account only when the supplier, he goes to the bank, deposit it in the bank, present it, then bank will clear it. Only then the money will be deducted from my bank. Until it gets deducted from my bank account, my passbook and my cash book will not be matched. Yes or no? Correct. No. So timing difference is that. I have issued, but until the supplier presents it, there is a gap. Similarly, check received but not deposited. I have got the check. The moment I get the check, I record it. As my bank balance increased. When will I record it? In cash book. But the money will come to bank account only when I go to bank, present it, then bank will put the money to my bank. So there's a gap. There's a timing gap. No, from the time I receive the check till the time the money actually comes to my bank account. Both are timing gaps. That's why it's called timing differences. So these are classic examples of timing differences. Second is transaction difference. These are those transactions which has happened in bank, but there is no intimation that this transaction has happened in the bank. To whom? To us. However, it becomes transaction error. Various examples is standing instruction. Say suppose you would have given standing instruction to the bank saying that every month deduct 10,000 rupees from my bank account for LIC premium. And they have given instruction. Now bank will, what will bank do? Automatically every year or every month 10,000 automatically deducted. But to the accountant or those for me who is accounting, okay, when they automatically deduct the money, I will not know. So I would have not recorded it. Because of this, we will be having the gap. Standing instruction is one example. Then bank charges, they'll directly debit from the bank account. I will not know. Bank charges, SMS charge. Or some customer directly puts the money to bank account. How will I know? That's also transaction. Then all these are transactions. Basically, it has happened in the bank account, but you don't know. That is called transaction differences. Since you don't know about it, you would have not recorded. And the third kind of difference is errors. And the errors can be committed by our end also, can be committed by bank's end also. If they have made error, still our balances will not match. If we have committed some error, say suppose I have debited 5,000 but I have recorded it as 50,000. So it's the error made by me. In any case, if any one of us commits error, then still cash book and passbook will not match. So these are the different kinds of errors that we have. Okay. See, every chapter has that one tricky point where they will, stumble upon. So I will tell you the tricky point here. In BRS, where you will stumble. Okay. Okay. Say suppose this is 1 year. See, BRS will be prepared every 1 year also. Or sometimes they will prepare month also. Anything. The period can be anything. Year also. Month also. Which one do you want me to take? Let's take month. Let's say we are preparing BRS every month. So these are 2 months. January and February. We are preparing BRS every month. Now say suppose I issue check here, which is on 5th Jan. I issue check to my supplier, but it is not yet presented. Till the end of 31st Jan, it is not yet presented. It was presented on 2nd Feb. Now tell me, is this the difference that I am supposed to address, or should I be okay about it? When are you doing the BRS? At this point. At this point, if I issue a check and if the money gets deducted from my bank account, say on 10th January, then I have no problem as on 31st January. You understood that? 5th January I issued a check. So the moment I issue a check, my cash book will be showing less balance, my passbook more balance. This difference will continue till when? If the money leaves my bank account on 10, then this difference will continue to 10. On 10th, when money goes from passbook also, now both became equal. So if I am preparing BRS as on 31st Jan, is there any need for me to do any adjustment for such a situation? No, because the difference was created on 5th, but it got rectified by 10th. So there is no need for me to do anything as on 31st Jan. Ade, if I have issued a check on 5th January, but that is not yet, but the money has not deducted from my bank account till 2nd February. Now, is this the difference that I have to address in this BRS? Yes, because as on 31st December, the difference is still existing. The difference got rectified only on 2nd February. Did you understand? So, while if I am preparing BRS as on 31st Jan, I will address which difference? The difference which is created in this period but gets rectified in the next period. Only those differences I will address in my BRS. If a difference gets created in that period and gets reversed also in that period, then that is not my problem. Did you understand this point? Adhike, you should be very careful when we are doing the BRS. When are we doing the BRS? As on 31st Jan. Now our question became inter period. So I have to address. And if I am doing BRS as on 28th February, then all the differences are created within the period and reversed within the period. So no need for me to do anything in the BRS that I will prepare on 28th February. So this is very important. Now here I did month by month. When you are doing BRS for year, you have to take entire year as one period. All of you clear? That is one important thing you should know. Then one more thing is, now let's do BRS. So in BRS also we have two methods. One is normal BRS that we do in a BRS statement, and one more is adjusted cash. Like that. So in normal BRS statement, all the differences will come in BRS only, plus or minus or. Like that. First we'll understand how to determine plus or minus. Correct, no? So BRS can start from cash book, also BRS can start from passbook. You have to see which balance is given in the question. Now balance as per. Now BRS is starting from cash, say it is 20. Now whatever differences comes, let's take one example. Check issued, but not presented. Say it is 2000. Now we have to decide whether we have to add it or not. So how to do it? You know already. This is left hand is your cash book and right hand is your passbook. So we are doing BRS from which angle? Since we are starting from cash book, we are doing BRS from this angle, left hand. You have issued the check, but they have not yet presented. And the money is reduced from cash book, but not yet reduced from passbook. We are doing BRS from cash book angle, so I have to make it equal. Which hand can I add? This hand. So I'm supposed to add. You understand it? Then any other one more example to do this?
Check issued, but
Check issued, same thing. No?
check is on.
Check. First one. Check. See, whenever check is this on, right? The reason why we have difference is because I have not received the intimation. So whenever check this one happens, what happens you should understand. Say suppose I first issued check. When I issue check, my cash book will reduce. And later when the check was clear, check gets clear, then passbook should also reduce. But what happened? The check got this one. Because of which my passbook will be same. All of you. Technically, the moment I come to know about the check this order, what should I do? I should reverse this entry. Because ಹೋಗಿತ್ತು ಅಂತ minus ಮಾಡಿದ್ವಿ. Reverse ಆಯ್ತು ಅಂದಾಗ it should have come back. But what you have done? You have still not got the intimation, because of which it is still down. Now if you are doing BRS from cash book angle, you are supposed to all of it clear. So check this honor, but not received intimation. Bank charges. Okay, what is bank charges? check dishonored by.
I see the check.
That is different. This was check dishonored. It is our check dishonored. Yes. Okay. It's our check dishonored. Bank charges. It is directly reduced from passport. We are doing BRS from cash flow capital. So minus. Let's discuss that possibility also. I have received a check. I have deposited in the bank, and that got dishonored. So whenever I receive the check, what happens?
Increase.
Cash book is more. This is the situation. So but good one thing is that if the money had come, this would have become equal, but it became dishonored. Now what should I do? Reverse this entry. So reduce. So minus. This is for check issued. Check issued getting dishonored. This is not. This situation will not arise actually. What she told, that situation arises. And the check received dishonored will arise. This will not arise actually. So don't note down. But if at all that comes in exam, then you know how to do it. Okay. It is check, received, and issued. Because why it becomes nonsense? Because if the check that I issue gets dishonored, I will know. Because I have not kept sufficient balance in the account. Okay. The check received and dishonored. Okay. So my cash book will be more. You have to reverse it back. So minus. Anything else? That's all. I think this much should be sufficient. So once you do all these adjustments, you'll automatically are supposed to arrive at balance as per past. It should match. Clear? Under this method, all kind of differences is coming in DRS. Then we have one more method, which is called as adjusted cash flow. So what we do is, what all differences we have, which we can rectify in cash book only, those differences we will only rectify. They are counted. Only those which cannot be rectified will go to DRS to keep it simple. So what is the adjusted cash book format? This one, cash book. Same like how we did it there. Date, particulars, date. Okay. So what you have to do, the small change when solving the answers is, since we are doing the adjustment in cash book only, it's as good as we are starting BRS from cash book. Hello? So we are doing BRS from cash book. Treat the debit side as plus and treat the credit side as minus. If you do this, and if you get the result as minus, then credit side you pass the entry. If you get the result as add, put it in debit side of cash book. Like that. Now the main question. So which all differences will be adjusted in cash book and which all differences will be adjusted in BRS? One simple thing here is only 3 entries is there which will always come in BRS, which are check issued but not presented, check received but not deposited, and errors made by bank. These 3 things will always come in BRS. Rest of can generally be rectified in cash book. So the logic you understood. Now, if you can rectify in cash book only, why are you showing it as a difference later in reconciliation? That was the logic. So that's how we do it. With an example, we'll directly understand. Okay? This adjusted cash book. We'll do this thing on an RTP question. So RTP does not have
So now we do this adjustment.
both will do. Okay. Come on guys, fast you should tell because your favorite topic. So first one we are doing normal. Okay. Let's start. So they have given what balance as per. The bank passbook of account number 5678 of Mrs. Geeta showed an overdraft of this point we have forgotten. So how to do overdraft is? There's 2 ways. Overdraft is a negative balance, correct? Just put negative and do it normally. That should be sufficient. So, on going through the passbook, the accountant found the following. So, okay.
ಸರ್ ಈ ಕ್ವಶನ್ ಬರ್ಲಿಲ್ಲ
ಏನೇನು
ಇದೇ ಕ್ವಶನ್ ಬರ್ಲಿಲ್ಲ
ಅವತ್ತು ಕೇಳಿದ್ದ ಮಾಡ್ತೀರಿ ಇದು ಪಾಸ್ಬುಕ್ ಇದೆ
Passbook.
Sure. Passbook. So its bank balance has been. Huh? Sorry? It doesn't matter. We use pen only. One good thing about CA exams, it is a proof. We have a proof. Okay. One good thing about CA exams is they don't care that much about formats. Even if you put it in pen, they will consider it equally. You can go through in YouTube. You can see now. If you have any doubts with respect to format, in YouTube you have so many videos where they have gone through these toppers papers. Toppers, the suggested answer, copy. You see that fellow would have written in atrocious handwriting. He would have put formats in pen. Still, he would have got full marks. What he suggests to save time, whatever you can do. If you think in pen you can do it faster, do it in pen, no problem at all. I am guaranteed. Okay. So bank balance as per passbook, how much? 33. So now please understand, BRS we are doing it from the point of view of passbook because we are starting BRS from passbook. Okay. So that's fine. Hello. Hello. So first one. A check of 1,080 credited in the passbook on 28th March. Please understand we are doing BRS as of 31st March. Being dishonored is debited again in the passbook on 1st April 2026. There was no entry in the cash book about the dishonor of the check until 15th April. So guys, what happened here? As on 31st March, I had issued, we have got one check. Check of 1,080 was credited in the passbook on 28th March, and I had got one check. I had deposited. The money has come to my bank account also, no problem. Later, what happened? It was again debited. It came to my bank account and left because the check got dishonored. Now, what would have happened? Passbook, reduction, cash book, more. So, that's good. Okay, now. When this happened, it debited again on 1st April 2026. Very important. Now let me restate it. On 28th March, money came. You had received a check, cash book was more. On 28th March, money came to bank account, your passbook also became more. Now both are equal. Again, when did it get deducted? On. When the dishonor again, the money was deducted. When? On 1st April, that is post the BRS period. As on BRS period, any differences was created? No. The difference itself was created in the next period. So this is subject to next BRS. In this BRS, there is nothing for us to do because both bank balance and cash balance is matching. Hence, no entry. Second, the difference created agite 1st April. All of you understood?
Yes, sir.
So there was no entry in the cash book about the dishonor till 15th. I don't care. As on 31st March, we have no difference. You understand it? Because money got deducted only on 1st April, next period. All of you clear?
Yes, sir.
Second, bankers had credited our account with 2,800 for interest collected by them on our behalf, but the same has not been entered in a cash book. So what is the matter?
Less.
The passbook is more and cash book is less. We are doing BRS from passbook and minus. This we will minus. Okay. Next. Out of 20,500 paid in by Mrs. Geeta in cash and by checks on 31st March 26, checks amounting to 7,500 were collected on 7th April. So how much she has deposited into her bank? Totally, check and cash. Totally she has deposited 500. So our cash book should have increased by 20,000. Cash book is increased by 20,500. Out of that, 7,500 came into bank account on 7th April, which is in the next period. Alva. Wait, full you have to listen. 20,500 remaining minus 7,500. Remaining is how much? If 7,000 is 500 is cleared after, then 13,000 will be cleared now only. Hey, hello. Understood? So 13,000 has come to my bank account. Till 7,500 had not come as on 31st March. That came later. Now tell me which number is the cause of difference? 7,000. Are you understanding? Inter periods affect padadu. Here what happened for 13? The difference was created in that period. Again we got back in that period. I don't care. So reason for difference is 7,500. What should we do? We are doing BRS from passbook angle. I'm supposed to add. Add how much? This is the reason for difference. 13,000 is already received before 31st March. Yeah. Fourth one. Out of the checks amounting to 7,800 drawn by her on 27th March, a check of 2,500 was encashed on 3rd April. And then she had issued check of 7,800. 2,500 was deducted from the bank account after 31st March in the next period. That means remaining is reduced from the bank account this period. And after the bandagilla, your assumption is what? The remaining is cleared in this period. So what is the cause of difference again? It's only 2,500 days. Out of 7,800, 5,300 is already reduced from bank account in this period. 2,500 was reduced in next period. So whenever they give this equation now, it got reduced from next period. And your assumption is what? With respect to the remaining, that is deducted from the bank account in this period. That is the default. Did you understand that? So the reason for difference is 2,500. So what has happened? You have issued the check, cash book reduced, passbook is more. We are doing BRS from passbook and then we are supposed to reduce. So reduce 2,000. Clear? Any doubts that you have? What done?
It was issued by.
She has issued the checks to supplier. So the moment she issues the check, cash book will be less, passbook will be more. So we are doing BRS from passbook angle minus. Clear? So this is. And did you observe one more thing about this and this? Whenever they tell that checks were collected in next period or money left the bank account in next period, the remaining amount has happened in this year, and that will not be the cause of difference. Whatever is happening in next period, that will be the cause of difference. All of it clear? Whichever is getting reversed in next period, that will be the cause of difference. See, in the first no entry also what happened? Difference, everything was fine as on 31st March. The problem is the difference itself got created in next period. At a BRS yav barutte. Difference gets creating in this period and reversing in this period comes in BRS. But what happened in first case was the difference itself was created in this period, hence it became no entry. Clear also? Very nice. Fifth one, banker seems to have given her a wrong credit for 500 paid in by her account number 8765 and a wrong debit in respect of a check for 300 against her account number 87. See, actually her account number is 5678. Can you see that? But what happened here? They have given a wrong credit and one wrong debit. Okay. So wrong credit andre your passbook will be more. So we have to reduce. So 500 should be subtracted and 300 is a wrong debit. So passbook will be less. So we have to bring it up. So wrong debit will be add. This is add.
So let's go.
Directly you can do that. Or separately it is minus 500 plus 300. Net minus 200. Clear? All of you. Wrong credit. Please understand, in banking, credit debit is ulta. Separate in bother you separate up okay, best. Like that. Always separate is best. More disclosure better. Sixth one. A check for 1,000 entered in cash book but omitted to be banked. So you have received the check, but you have forgotten to deposit it bank. So cash book will be more, passbook will be less. Where will be as from cash book and add. Passbook and so add that. Correct or no? Oh, we are doing BRS from passbook and add. Seventh. A bill receivable of 5,200 previously dishonored, which was discounted for 200 with the bank, had been dishonored, but advice was received on 1st April 2020. Advice is communication. Now what happened is, for this it's very important for you to know how bills receivable work. If drawer has drawn bills receivable, he has one option. He can discount it with the bank. He will discount it with the bank, he'll receive the money, he'll go. After whatever period is there, that gets elapsed. Then drawer is supposed to pay the bank. Correct? No? If drawer fails to pay it to the bank, then the money will be deducted from drawer's bank account. All of you agree? Say the same thing. I was the drawer. I drew the bill because for me it's bills receivable. I had gone to the bank and I got it discounted. Bill value was 5,200. But they give us a discount of 2. So I net got 5,000. The drawer. In our case, the drawer is Geeta. Okay. Then our drawer we defaulted, dishonored. So money will go from whose bank? Geeta's bank. How much will go? 5,200 will go, not 5,000. Alva. He used the money for the entire 3 months. Then he's paying. So technically he should pay it along with interest. So how much gets deducted from the drawer's bank account? Now, the moment dishonor happens, directly money will go. So passbook will reduce by 5,200. If I had come to know about this dishonor before March, I would have reduced this also. But I did not get the intimation. I got the intimation on 1st April. That means as on BRS date, there is a difference. So we are doing BRS from passbook capital. We are supposed to add how much? The moment check, bill gets dishonored, no, money is automatically reduced from bank. Please understand. One small change I'll make to this question. Tell me what is that. I received the advice on 29th March. Then it would have become no impact. Because if you had received advice on 29th March, you would have reduced the cash automatically. Dishonor item, they would have reduced it cash book. Then there is no difference. Since the intimation came later, you would have not recorded, there is difference persisting. A bill for 10,000 was retired by the bank under a rebate of 175, but the full amount of the bill was credited in the bank column of the cash book. So you have paid one bills payable. How much is the bills payable? 10,000. Since you are paying it early, bill is getting retired. You are paying early, you got a rebate of 170. That means how much would have left your bank account? 10,000 minus 175. And then 9,000? 825 would have left your bank. But you have credited 10,000 in your bank. So what would have happened situation? Passbook is more or cash book?
Cash book is more because we
Okay, no doubt.
Sir, cash book is less, sir.
Cash book is okay, I don't little. See, cash book in the left, how much money left cash book? 10,000. Whereas how much money left passbook? 9,875. So passbook balance will be more and cash book balance will be less. Yes or no? You understood? Payments at over understood balance. So more balance is left from cash book, less balance has left the passbook. So cash book will be lesser and passbook will be more. This passbook is more and cash book is this. We are doing VRS now. Passbook can be reduced. How much to reduce? Only the
Difference.
this one, which is I know. Your passbook is more by 175. A check for 2,400 deposited into the bank but omitted to be recorded in cash book and was collected by the bank on 31st March 2026. Good question. You have got one check because of which your cash book is, the moment you got the check, cash book is more. You have depot, but omitted to be recorded. Oh, it's omitted to be recorded in cash book, and cash book is less. On 31st March, money came to bank account, so passbook is more and cash book is less. We are doing VRS from passbook and so minus. See what is the answer? This one we know that. We'll get wrong answer.
1,000 different.
How's that? Sure. I guys check the answer first.
Sir, on the balance method ಅಂತ ಮಾಡಿದ್ದಾರೆ. Right balance.
Hey, no doubt. There is no difference between. I understand.
27,950 negative balance.
20?
7,950.
You are not telling from the answer only. Yes, it is.
Minus 27.
Overdraft minus the line.
Line idre minus bala.
Hey, not line da.
Oh, overdraft.
Hey, okay. In exam, how will you know? You have started the BRS with negative now. If it ends with negative, then still it has BRS balance, overdraft balance. If it becomes positive, then it has favorable balance in the end. Okay. Now, if you see, no, even after doing all the plus and minus, still you have the answer as negative 25. So it is overdraft balance. Clear?
Sir.
Yeah, I sent that document to it. ಇವಾಗ ಒಂದೊಂದು ಕಡೆ ಈಗ ನಿಮ್ಮ ಹತ್ರ ಕಂಪೈಲ್ ಮಾಡಿಸ್ಕೊಂಡು ಕಳ್ಸ್ಕೊಬೇಕು ಅಷ್ಟೇ. If I give everything, then you'll not come next day only. What is?
That's the reason why you are the CA.
Say nothing like that. There's a reason because I fasted.
No, I'm telling you, told if you said we all won't come now. Like clever.
Which is your batch? ಎಲ್ಲದಕ್ಕೂ sending everything. Now I'm sending it to all the groups. To all the now I know what to send to all the groups. Okay.
Sir,
I'll come to it.
question.
So we have what? We have bill of exchange, depreciation, and inventory in the more chapter. Oh, you want this?
Overdraft balance minus 33,575. Balance method as ಮಾಡಬೇಕಾದ್ರೆ minus value ಇರಬಾರ್ದು.
Balance method ಮಾಡಬೇಕಲ್ಲ. What do we have? ಒಂದು plus or minus.
Passbook minus ಇರಬಾರ್ದು.
If you are telling plus or minus. Okay. Then you will do plus or minus ಉಲ್ಟಾ.
ಉಲ್ಟಾ ಆಗುತ್ತೆ. ಅವಾಗೆ
ಹೆಂಗ್ರಿ ಹಂಗಾಗಲ್ಲ ಬೇಕಾದ್ರೆ if I can show it here only, okay? Difference same ಬರುತ್ತೆ ಅದಕ್ಕೆ ಪ್ಲಸ್ ಎಲ್ಲ ಉಲ್ಟಾ different ಆಗುತ್ತೆ ಚಾನ್ಸ್ ಇಲ್ಲ ಆಯ್ತಾ. You do it once and let me show me. Do one thing. You do it properly and bring it to this company.
Sir, take his best, sir.
Hey,
Sir.
which question to do now? This week?
Second one.
Uh,
Yeah, what have you done? What is it?
but they've never asked adjusted cash flow formula.
So second one is adjusted. Second or third.
Second one, huh? Okay, we'll come to second one. So this was asked in January 2026. Oh, fresher. And then this attempt they'll not ask, no? Never think like that.
Sir, in May they went also this time.
Never think like that. It will be indifferent.
Okay.
Oh, in gap we have May paper also. Okay. Che, I have not put May paper in this compilation. May 26 is not. You just see May 26, yeah.
We keep it for practice.
Good idea. According to the cash book of Arun, there was a balance of 8,90,000 in his bank as on 30th June 2025. On investigation, you find that checks amounting to 1,20,000 issued to creditors have not been presented for payment till the date. So, what we'll do is, as and when we need one adjustment, okay, we'll see where it is sorted in BRSM or in cash book. Okay. First one, checks amounting to 120 issued to creditors have not been presented. This is check issued but not presented. Classic. It comes in BRS. You look at this in BRS. Next. Check paid into bank amounting to 2,21,000, out of which checks amounting to 1,10,000 only collected by the bank up to 30th June. Please note our BRS date is 30th June only here. Okay, so this is what check received but not yet deposited. This also will be. But how much is the amount?
1,11,000.
See, you have paid 221, but 110 was collected by 30th June 2020. So what will be the amount of difference? Let me see. 1 lakh. Correct? No, because 221 only. 110 was cleared within 30th June. I don't care. That will not be the difference. The remaining will be different. So 111. Okay. A dividend of 8,000 and rent amounting to 1,20,000 received by the bank and entered in the passbook but not recorded in the cash book. Yeah, this can be, you have not recorded, so this can be adjusted in cash. We have not recorded. No, let's record it and finish. Okay. Insurance premium up to 31st December paid by the bank, not entered in cash. Again, this also. Adjusted cash. The payment side of the cash book had been undercast by 1,000. Whose error it is? Our error or bank's error? Payment side of cash book has been undercast. It is our error. So we can rectify our error, but we cannot rectify bank's error. So that's why bank error and those two will come under BRS. So, okay, this is easy. Bank charges 300 shown in the passbook had not been entered in the cash. Easy. Hey, what nonsense? Which attempt? A bill payable of 40,000 had been paid by the bank but was not entered in the cash book. And bill receivable for 12,000 had been discounted with the bank at a cost of 200, which had also not been recorded in the cash book. So both the problem is easy. You are required to make the appropriate adjustments in the cash book and then pass. So let's start. First. So you know, debit side is plus and credit side is minus. Okay. So let's start. So third one is easy. A dividend of 8,000 and rent 1,20,000 is received by the bank but not entered in cost. So we are doing BRS from which angle? Cash flow. Since we are doing adjustments in cash flow, we are doing BRS from cash flow. Money has directly come to passbook. So passbook is more. Cash book is less. We are doing BRS from cash book angle add. So add under. It should come which side? Add at the debit side. So 2 rent and 2. How much is dividend? 8,000. And how much is rent? 1 lakh. Clear all of you? Next. This also is easy. Insurance premium paid by the bank. And passbook is less and cash book is more. We are doing BRS now. Cash book angle minus. Minus and it should come in. By how much? 5,000. Next. Payment side of the cash book has been under cost. And if payment side of the cash book is under cost, then cash book is more and passbook is less. We are doing BRS now. Cash book angle. So we are supposed to subtract. Hey, you understood? Payment is under cost and the balance is more. So cash book is more, passbook is less. We are doing BRS from cash book angle minus. So entry should come in credit side. So by how much? It is 1,000. Next. Bank charges 300 shown in the passbook had not been entered in cash. So here passbook is less and cash book is more. We are doing BRS from cash book angle minus. Minus and it should come in credit. So by how much? Next. A bill payable of 40,000 had been paid by the bank but was not entered in cash. That means we have paid for bills payment and the cash book is, passbook is less and cash book is more. We are doing BRS now. Cash book angle minus. Minus the entry should come in credit. So by how much? It is 40,000. Okay. Next one more was what? Then bills receivable 12,000 had been discounted with the bank at a cost of 200. So we have got money. So passbook is more and cash book is less. We are doing BRS from cash book and add. How much should we add? It is 11,800 because how much would have come to bank? 11,800. So here also you should add by 11,800. Two bills receivable. $11,800. Next. Now find out the balance. The opening balance you should have had, no?
8 lakh.
Correct. What is the opening balance?
8 lakh 90,000.
There was a balance of 8,90,000 in his bank. How much did you get?
Balance carried down 7 lakh 91,500.
8,90,000. So guys, you already had an opening balance of 8,90,000, which will come which side? Favorable balance will come in
Credit.
overdraft will come in credit side. Favorable balance will come in. Do we have favorable overdraft? Overdraft was in last question now. This is favorable. So in cash book the balance is debit. Guys, I hope you know. Favorable balance in cash book is debit. In passbook is credit. So 2.
Then 1 is a different one.
8 lakh. 8 lakh 90,000. Okay.
How it will be 9,98,500.
9 lakh.
88,500.
9 lakh 83. Hey, throw the calci down.
What did it?
9 lakh.
What the? 11,800. 8.
Okay.
Sir, and sit there.
Yeah. Now the BRS that we prepare, no. The BRS that we prepare starts from which balance? This 9,83,100. Okay, so let's start. BRS. What is the adjusted balance? Is 9,83,000. Now the first one is check issued but not yet presented. And then cash book is less, passbook is more. We are doing based on cash book and then they add it. Okay. How much? It is 1,20,000. Then this is check received but not deposited. So your cash book is more and passbook is less. We are doing BRS from cash book angle minus. Minus for how much? 1,11,000. That's all. Let's see what's the balance. So balance as per past flow. Is 9 lakh. 9,22,000. 100. So let's see the answer. Question 2. So it's 9,92,000. Adjusted here. If it is negative, it's overdraft. That's a question and overdraft. You take it as negative. Now wait. Now this is the adjusted cash book situation. Okay. If the question only has started with overdraft, then this opening balance here it came in debit side. No, it would have come in credit side if they had given overdraft balance. Here it was favorable, it took it in debit side. Once you prepare cash book, now here you have got favorable. It also ended with favorable and unfavorable. Favorable only. How do you know? As long as debit side is greater than credit side, you have favorable balance. Here I still have debit greater than credit. That is the balance. If the balance had come in debit side here, two balance carried out. Then I have overdraft. Here the BRS would have started as overdraft, negative. Clear? The adjusted cash book balance I got after adjusting was also still favorable. I have taken it as the positive balance. Clear all of it?
Sir, I was going to calculate
100% then allowing something.
9,98,000.
We do after class. Okay. Next. So we are done with BRS. Let's enter into. Any other questions you want me to do in BRS? I think that much should be sufficient. I think